Hello, everybody. It is Wednesday, October 5th. We are watching NQ primarily on this screen, although it was getting so slow that I had to get down into a smaller time frame just to figure out if there's a trade or not. But this is NQ. This is the 24 tick Renko chart with my version of the trading perform algo. The official algo looks like this. And I've changed some of the colors and added a couple of my own ideas to get this. So mine's a lot busier because I've been working with it for a long time, which I've explained excessively. These indicators on the bottom are momentum indicators that I've created. They're like basically multi-time frame MACDs. The math is similar to MACDs. It's just not using the typical moving averages to do it. I'm just going to make them small right now because it's distracting, especially to people who are used to this, and we don't really follow any indicators. And the truth of the matter is that most of the important information that's found in here has already been turned into signals, like the colors in the background and little sideways arrows that are either yellow or blue. So the only reason to really look at them is to see if there's divergence, which there was. Here, I'll show you what that looks like quick, as long as we're talking about it. So which one was it? It was the lower. So if you take a look at this, we have what looks like a kind of a head and shoulder, inverse head and shoulders pattern here. See that? And this low is clearly the lowest. I'm talking about this blue line. It's actually, there's two different indicators overlapping, and we look for confluence, or I look for confluence. But this one being lower than this one, yet the actual price action made a higher low. It's not a buy signal, right? You don't just immediately buy there. You'll get crushed if you try to, in my opinion, if you try to just like trade off of divergence. But it's a sign that the trend is probably headed higher if there's a trend. So I had mentioned that back here, it was unclear who was in control. You can see that like sellers tried to push it down. They got a little bit oversold. Buyers responded, which makes sense considering what's been happening all day. They negotiated this area. You can see how like we couldn't even get any bars to stretch outside of the channel. Then we finally got one bar outside the channel, but it's pink, which is like a weak bar, and you can see that the indicator got all the way up here, right? And then we came down. This one made a lower low, right? But this one did not. So that was our first sign that like sellers basically got trapped down here and they were struggling. And so there's, these extra indicators on here sort of showing me like, hey, there's something going on in order flow, and there's something going on in the momentum. So there's a momentum shift. And then you can also see how these yellow stars here, which are going the opposite direction, are trying to hold this important spot. So like, I don't necessarily, like I said, I don't usually buy because of that. But when I see this, and then when he successfully makes a higher high and a higher low, I'm pretty committed at that point not to short this. It's just a matter of waiting for a buy signal. If it's bullish enough, what you can do is just mark off the triangles. Here, I'll show you on Simon's. This will only work if it's trending, okay? But what you can do is you can mark off the range of each orange triangle on his. So like, let's say you thought right here, you're like, okay, that was a trap. It's been bullish. I want to trade momentum. I want to buy dips. So what you would do is once you broke this high, which happens right there, right? See, this is why I have my lines, because I can't see this. No, it did not break yet. Okay, so we have to break this. Right there. So broken above it, right? So now it's like, okay, pretty sure that we're going to continue to trend. So we can start to mark off, see these triangles, like this one technically worked too, but mark off the triangles. And now any dip and bounce with an algo signal out of that range, if the trend is bullish, will generally hold. And so if you missed that one, And you can mark this because you got another orange triangle, and so it tells you to go ahead. Now, the higher up you get, approaching or going past this orange line, the lower the win rate will be with these momentum trades, and they are not sanctioned by my coach, right? This is not the way that we typically trade because it's not, the win rate on these are not 70%. It's, first of all, you need to know it's trending, and then after you know it's trending, it's probably about 50%. So if you're wrong about the direction, or if it's like balanced and you think it's trending, you're gonna have like a 40% win rate doing this. So it's not recommended, but it does work. So that would be another. Now your stop needs to go under the triangle bar, right? Ooh, that one fucking stings. So that would get you right there. Get stopped out, and then you'd have to come right back in again because it triggered again. That happens. And then you could do it again. Like I said, 40-50% win rate at best, but if there's no other way to know which ones to buy and which ones not to, and it's trending, there's really not a lot of other things that work. So that one didn't fire, right? That's NQ. Let me show you what it would look like on ES. Same exact idea. Come back where, okay, so trend is up, right? We get this consolidation. So you're saying, okay, well, pretty sure it's trending as long as we can break this. And then start holding on dips. So we missed it there, unfortunately, broke it, right? Okay, so now mark off triangles and see if we can get stars or green bars to fire off. That's the wrong direction. We don't take that. Right there. Green bar in the range, interacting in the range of a triangle. Did I mark the triangle correctly? Hold on. Why is it here? Did I do this wrong? Was there no triangle here? I thought I saw a triangle here. Sorry, it's this. The last orange triangle. I think I did the wrong triangle. His is not quite the same as mine. I get confused sometimes by Simon's charts because I'm used to mine. So this is the first one that interacts with it, right? And then we have another, and so that one gets a scalp. Then we have another triangle here that just, it breaks through it without triggering. So that's not a stop, it's just no signal. This one got a star. My stars and triangles are way too far away from. I just gotta adjust this. I don't usually trade ES on this. And so see that's still in the same zone. Okay, I see what happened. The triangles are just so far down here that I can't see them. Okay, so that's why it didn't look like there was a triangle there. So this one is associated with this star, right? Like I said, this is it doesn't look like this on Simon's. It's just because I don't trade ES. I haven't fixed this. Oops. And then so now that it goes higher, we can go to the next triangle. And so you get this one. Or this one. Right? And stop has to be under this triangle bar associated with this orange up triangle. So this would be an entry, this would be an entry, and eventually you catch on, you know. So you could keep doing that as long as it's working. So here is, the digging just means we're going beyond the channel, and there's potentially a mean reversion opportunity. This triangle is way too high in my opinion, like that's dangerous. But if we can get a pullback into here, like 3,800, and we get an algo signal of order flow aggression, then yeah, that's good. That's what I'd be looking at here. Oh, I forgot to sign into the chat here. Or did I just not open the window? No, I didn't do it. Okay. Now I can see you guys if you chat. Cool. So yeah, that's how I would trade it. That's the only way I know how to trade the momentum. Otherwise, it's just wait for the market to start moving back and forth. Now on mine, I've added a couple things that can be used. For instance, when you know the direction, if you get a diamond that's going in the direction that you want to be in, and if you look to the left, there's been a sign of aggression that you're trapping. So like this, right? These orange bars count. This orange bar counts. When you get one of those going the wrong direction, right, the sign of aggression, and then you get a diamond that closes above that. So, and when I say above it, I mean above the point of control where all the volume was. So I'd mark the point of control. I'd wait to get a diamond. It can't be a star. This one doesn't work. It's got to be a diamond on the inside of the bar, which is a trap indicator that I've added. And that one gets, so the entry is the diamond bar. That's the entry. And then this is the entry long here. And what you'll see is this is only going to work if the auction stays in the top half of this channel or above it. As soon as you get this, it stops working. This, all good. I don't see it firing here. You need white diamonds for it to work. So see how, here's a good example. So everything's going up, staying in the top of the channel, right? Top of the channel, above the channel, whatever. Comes back in to the middle of the channel, we get the diamond. That's an okay scalp, as long as you've trapped shorts, which you have. And the most recent one should have its point of control, which is the yellow line or the dash below the close of your entry. So your entry's here, they're trapped, right? Good to go for a scalp. You can then put your stop if you want to trail and pick up as much, basically get paid as much as you want, depending on your size. The trick is once it falls down here underneath the midpoint of the channel, you have to stop taking that trade until you start control, because that means it could be, in this case, you wouldn't just exit, right? But if it now gave me a diamond right here, I would not buy it right here, because we've gotten back into the middle of the channel, and this looks more like balance here. Now, this trade never stopped out, but really what this is signaling is that we've got another extension coming back up here. So most of my profit would be off right there at the blue. Actually, it'd be the first time I hit the blue right there. That bar is where most of my profit's out, and then I'm maybe holding 2 contracts as runners, and if they don't sweep the bottom of this, we're good to go. Now, what's funny is that if they do sweep the bottom of this and then come back with a star or a green bar or a diamond, it's actually a different trade. But this trade, the momentum trade, only works if price is staying above the midpoint. So like if this was a diamond, and actually green bars work pretty good too, it's actually okay. And again, that's only the case when you have a trapped trader below you. So this guy and this guy. This one's a little tricky because you've got this aggressive seller above you. It happens to work. No diamond there, but you can see we're still staying in the top half. Okay, now we come down under the half, right? So now you don't want to assume it's bullish anymore. And as you can see, we get a pullback. Then they can't get out of the bottom half. So now green bars and diamonds are going to be viable. Green bars, diamonds. As long as the halfway point, that gray line holds. This one should be okay. So see how this low gets defended. This one, whoops. This one should be okay. Sorry, it's pink on a pink bar. This one. Right, so all of those, and then now once you've gotten over the blue line, taking these is really, really, really risky, right? Buying, above the blue line is going to be above the top of the channel. I'm not saying it'll never work. It's just you need a shit ton of trap shorts for those extensions to work. Usually, when you get aggression up here like this, bullish aggression, usually what happens is you get one more push and then a roll. So if you're gonna fight something like this, which I don't recommend, you need to wait for this, right? Now, if it sets up, we can fight it. But it's fucking risky, right? Like, it's not gonna work 70% of the time up here because you're fighting the trend. If they give me a star, I'll try it. I'll show you. Yeah, no star. So we have to wait. And this star would be too low now, because the target for these is to come back into the channel, and then we see what happens. But you can only do it if they've gotten exhausted. And like I said, that red outline is not enough. That just tells me what I already know, which is that we're getting a little bit extended here, and there might be a trap buyer at the top. That's not good enough. I don't want to be the one aggressively shorting. I want to follow somebody aggressive. I don't want to be the first one to do it. So there's no short here for me to take. The other thing you can do is figure out where all the... Oh, I said I would make these small. Sorry, I forgot. You can figure out where all the volume is. Okay. And which is like right near the voodoo range level in this case. And then mark off that high volume node and basically say, I'm not going to short unless we can get volume underneath that. And that's a really good one. Well, it was long pretty much all day, Hefe. But like I said, these were all longs. The algo signals that occurred at the midpoints. This one I said is a little bit risky. And now if they would have given me a star down, it would be a suggestion that we're coming for a retrace for a short, but it didn't fire. So I don't have good enough odds to short it without the algo. Like if the algo doesn't want to get short here, then I don't want to get short here. Let's just put it that way. It doesn't mean it can't retrace. It's just that I want to short, especially with something like this where you're fighting a big trend. Even though I know it looks extended and everything's set up to be a short, if I don't get the algo to signal, it's very possible that it's going to come up, sweep my stop, and then roll over with an algo signal. So like I'm just going to be patient and wait for the algo to tell me. But had this red bar been a star or an orange bar, I would have taken the short there, targeting 15 points, and then possibly leaving a runner if they get any speed associated with it. But really, you're not going to get any extensions to the downside unless you can get aggressive sellers to show up underneath where this point of control is, which is based on the wave to the high. So any shorts in here should basically be targeting that pink line right there and getting most of your risk off because you're fighting the trend. I'm not saying you can't do it, it's just harder. In other words, like you're going to get stopped more often than you think. Even if the algo does say it's cool, but right now it's this red outline by itself, even after a pink bar it's not a high odds setup. It's not like a 60+% setup. It's just a sign that there's a trapped seller, a trapped buyer at the high of that bar. But I have no sign of aggression, so I don't want to be the one that. See, you're only going to get a roll down when somebody tries to short it and aggressively and then fails, and then that guy's stop gets swept and the liquidity gets sucked up, and then finally you can roll over. So I don't want to be the guy that gets their stop swept, and then after that. You see it go to my target. Like, I'm not interested in that trade. I don't want to be that guy. No one wants to be that guy. So I'm going to, even though the conditions were right, I'm going to assume that they're targeting that liquidity up there. And they're going to head up in that direction. And then if I can get a rollover with aggression up there, I will consider following the aggression. But I'm not going to be the aggressive trader that fires the first bullet going the other direction. I just don't need to be first. Like the 15 points I get being second with like a 60% win rate is the same value as the 15 points you get being first, except for the fact that when you try to be first, you're usually wrong a couple times. But had I gotten that star, I would have shorted and I'd already be out the majority of my contracts. So that's how quick those scalps, counter trend scalps are. They're just, someone left a little money on the table, grab it, let them take profits, get out of their way, let them take the stops of everybody who got in aggressively, and then see if you can trap some buyers at the highs. But before this really rolls over, the important thing to recognize is that it doesn't matter how high it's going. It can literally just keep going, like through the close. It could just go, 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 close at new highs. There's nothing to keep that from happening. And so if in your mind you're like, this can't go any higher, it's so overextended, it hasn't had a good dip. It's like all of that stuff is moot on this time frame. Like you can think about that like when you're looking at like the weekly or maybe the daily time frame sometimes, but on this time frame, if I'm only looking for 15 points, like none of that stuff matters. And none of like unless it comes to like actual news coming out at this moment, any like news or fundamental stuff, all that stuff, totally, I just ignore it because all I care about is do I have a 15-point trade or not? And what are the chances that 15-point trade is going to extend further than 15 points? Because that will help me decide if I want to take it or not. Because I'd be much more interested in taking a trade that has the potential of being like a 50-point to 100-point trade than the one that I know most of the time is only going to be 15 points. So if I want to be conservative, I'm going to skip the ones that I don't think are going to go very far. Okay, so I got a star underneath the volume point of control. That was the first step for bears. So now retraces that's set up have a potential to be a rollover. I'd really like to see one more bar close underneath it because the POC on that bar was above it. See this dash right here and the line that connects them? It's above the pink line. So if this one comes back up with a star, they're just gonna rush the stops at the highs. And you know these guys do it all the time. Like they get everybody committed, and then as soon as they see someone get committed, they rush their stop. That's pretty much the name of the game. So one more close underneath that pink line would really help. If we had more time, I'd say, there might be an opportunity for like a bigger trade. But the fact that there's only half an hour makes it also difficult to think that we're gonna like it's hard to guess how far you're gonna go in 30 minutes, right? Like because so many people have to close their positions that realistically it probably can go further than you'd think. But if they run into support somewhere, it's just gonna bounce back like magic. Okay, so we got that second bar. That's really, really good. So for sellers. So this bar showing up here underneath the pink. Oh fuck, that one didn't have the POC under the pink either. I guess we need one more. Yeah, we need this line to be under this pink line, preferably under the voodoo range. And and then for it to close bearish. That would be ideal because right now all of the volume of these bars is actually like right in this volume build here, even above it. So if they save it, all they have to do is get through this low volume node and then they can get right to the high. So we need a VPOC below that pink line. This pink line right here. Or like below this little shaded area would be good. Oh my goodness, my cat is so noisy. Sorry if you can hear him meowing. So yeah, sellers actually need one more bar. Now it does not have to be consecutive. They can get a green bar and then a bearish bar. That would be cool. But really we need to develop volume is what we say underneath that VPOC here to really have any chance of a true drop. It needs to get underneath that and actually put volume in of sellers, not just buyers. So one more bar here, or else up bar and then a down bar would probably do it. But I'm not gonna short the breakdown. I'm gonna wait for a retrace if that happens. Which again, you have to accept that you might miss the trade, and I'd rather miss it than swing and miss like 8 times, guessing which one's going to be the top, even though the conditions were right for it to roll over. When I don't get that signal, I don't take the trade. Now it's possible that it fired. No, it didn't. Okay, so say it's possible that it fired on a different time frame, and that's always a little bit frustrating. But in this case, it didn't. And did ES do it? Let's see if ES fired. ES 8-tick did. ES 8-tick got a short signal. That's interesting. So if you were watching ES on like in the room on Simon's chart, you would have seen that one signal short, but NQ did not. So we'll leave them both up and see if here. Let me draw the volume profile here. Fuck, they're not going to get that third close. See that? They're defending that. Okay, so this one, where's all the volume on ES? Right there. So this is where the volume is on ES. Is in this gray line. The bears really need to get volume below this to have any chance of a continued rollover. Otherwise, it's just going to go higher. So, yeah, ES has some work. ES bears have some work to do. NQ just has to get down to 65.75 and they should be good. But I mean, who wants to short that? You know what I mean? I mean, if you do, you have to ask yourself why. Like, is it because we're at a location that you think is going to get a rotation? Well, why should it be the first time or the second time or like? How do you know which one? You know what I mean? Like, the only way I know, like, I might say that I like this location for a short, but I need evidence that they have not only the conditions to get a rollover and the location, but also the firepower, and I don't see it yet. And does that mean that I miss out on shorting the top? Possibly, right? But it also means that I'm not going to short in the wrong spot very often. Now our triangles here, so if we wanted to be buyers, we'd be looking for stars and green bars and diamonds coming out of this area. But you can see we've actually already traded below this triangle, which is a red flag if you're trying to trade momentum. Like that's a problem, most likely. And it means that we could technically target all the way back here to the next one, realistically. But we have a VPOC here from the last 3 days or so. Like the average price where most of the volume is like right below our channel. So getting all the way down here is honestly pretty tricky. I would like a retrace so I could short it though. That with an algo signal, that'd be great. Otherwise, it's just watch, take notes, and learn, and see if there's something that I could have relied on. And the only thing I see, which is a pattern, but it doesn't work all the time, is that we got this yellow arrow on a pink bar above the channel. But you can see we got it right here too. And so what I think that basically is going to mean, like practically, is that this area here can probably get retraced. You can see that it does it here, and then we get the aggressive short signal if you're bearish, and it can't really go anywhere, and then they get it again, and it gets stuck right where the volume point of control is on that bar with the arrow. See that? So when it's really bullish, these yellow arrows may actually set up for continuation. But you can see that this one, clearly that did not happen. And so what I'm wondering is when it does close down like this, like rather than being up, but instead it closes down under it, could it be that a retrace into that zone? So in other words, shorting this area now that it's come down like right here or right here or here, if it gets up there, might be a good idea. I don't have metrics on it, but it's something I've seen work. I just don't know how often it works, and I especially don't know how often it works in this situation. So I like the location. I see a reason for some profit taking, But what you'll see is, I don't take a lot of trades. I mean, today, for instance, let me see if I can show you this without showing my account info. So like today, I took 10 trades total, you know, but you can see my win rate's 80%, and that includes 10% scratched, right? And that was actually a misclick. So, or just something where I got in when it wasn't a valid trade and I immediately got out. So in reality, it's actually, yeah, it's like the win rates you'll see there. My win rates are good, but uh, I traded small today because it was a trend day, so I was only trading micros. Um, but the important thing to see is if you're patient, if I was trading my regular size, it would be a typical winning day. I traded micros today because first of all, it's a holiday, it's Yom Kippur. Second of all, I knew right in the beginning of the day, I had one trade on full size that worked, but it worked in a way that I didn't expect. And so right there, I was like, something's not quite right here. Everything's just like falling apart. There no buyers are showing up. There's nobody trading. And so when it V'd off the bottom there, I got one more trade, but I took it on small size because I was not confident that it was gonna really do anything because I hadn't seen anybody respond to the market for like an hour and a half. Right? It was just like constant orders on the bid or on the offer, I mean. And then all of a sudden we saw a sign of aggression. The algo fired. I went ahead and followed it. It paid me, but I didn't hold it very long because I wasn't very confident. And I took it with small size. I got one more piece of it, and then just haven't felt the need. I had a couple of things to do. Came back and just saw that we're just pretty much going straight up or chopping and what we call grinding higher. And so the opportunities, they're there, but they're not very high odds opportunities. And yeah, I didn't really feel like giving up like a day's work. Even if I was trading small size, it's psychologically, it's really not good for you if you do everything right and then you end up giving away that. Like you do everything right, you get paid for it, and then you end up giving that away like later in the day. It psychologically, it actually like hurts you because it makes you think that subconsciously that your good decisions didn't pay off. There we go. So there's a seller. Fuck, they still didn't get. Okay, it's really fucking close. We need to get a bearish bar with this dash below this volume build. This one is so close, and it's a sign of aggression, right? So it's probably okay, but I have been scolded before for adjusting the rules because technically, by a couple ticks, it's not quite below. Like I could probably redraw this a little bit better. Let me see. Let's see where the actual volume was. You know what? We might be okay. The volume build is here. It's fucking close, you guys. It's fucking close. It's right there. That dash, all that volume on that bearish bar is right on the volume build of this move up, which happened on this candle here, or this bar here. So, which I can see on my, I've got it too small now. Let me double check that I'm right about that. No. Wait a minute. That doesn't make sense. Hold on. Okay. Yeah, this one. Okay, yeah, see, they're going to try to fight this. This is where all the volume was on here. I can show you. We can draw it down, too. So the volume is down here. Buyers would need to take that back now. If they can close just one more bear, then pretty much any retrace is good to go. Short, I mean. But like I said, I really wanted to see a VPOC on a bearish bar be underneath this level. That's what I would need to think that any retrace up could be sold. If I want confidence to sell out of this zone, I want one more bear bar underneath this VPOC, this build in volume right here. And yeah, the yellow line is just where volume is, and then obviously the bars close wherever price is. And when volume and price aren't working together, you have to take notice of that. So like here, price is clearly trying to go down, but volume didn't. And so now volume went down and price is not going down. That's not what you want to see if you're short. But we'll see where it closes though. That's really all that matters. We'll see where it closes, because if it closes here, it's suspect whether or not this liquidity is safe or not. Because my first inclination was we didn't get a high odds algo signal here. Most likely we're going to retrace and then take those stops, right? That's what I said I thought was probably going to happen. But sometimes the algo doesn't fire and you just miss a move. You know, it doesn't. If it, you know, when you have rules for what you have to see to make a trade, sometimes you're going to miss trades. But I'm also going to miss a whole lot of situations where I would have traded despite the fact that there was no reason to trade, and that's worse for me. I would rather miss occasionally, especially at the very high of the day or whatever. I'd much rather miss this than short this and short this and short this. You know what I mean? Like, I'm cool with missing as long as I can also miss some really, really poor opportunities. Because if you look back at every red candle like this today, I can pretty much guarantee you that they did not produce rollovers most of the time. Sometimes they do, but not 60%, which is really my. I'm not even interested in a mean reversion. This is mean reversion, right? We're trying to fight the trend. We're trying to get back to the mean. And the mean is this gray line. So this is clearly mean reversion. I'm not interested in mean reversion trades that don't have better than a 60% win rate. If you're trading momentum, you don't need that 60% win rate, but you need to be able to hold your winners. And that can be really hard to do with futures. So you just gotta decide what kind of trader you are. And for me, I'm more of a mean reversion trader. So I can't be taking trades that only work 30% of the time. Even if that means sitting around and sitting on a green day and not improving it, right? I'm not going to give that back on like a 30 or 40% win rate trade. I just, like that, in my opinion, that's not being a trader. Like, that's not running a business very well, you know? Like, my trading is like, I think about it in the same way as someone who's like making a decision on whether or not they should like purchase or sell inventory for a business. And if that deal isn't very good, I know that that's going to take me a lot of time and work to recover from. So yeah, why do it? Like, I'm going to wait till I can buy it on sale. You know, I'll sell my inventory when it's more expensive. Same shit. But they certainly don't seem to want to leave this area, which is irritating. You can see on the candle chart that we are right at that Buddha range level. They tested above it and failed. So that was the first sign that things might not be going so well for bulls. But that's not always a reversal, right? We've seen plenty of opportunity, plenty of times where that doesn't hold. But this dashed line is that Buddha range level. And so you can hopefully kind of see that once they got above it, it was just, there was nothing left here. So there's no stars. This is actually a bearish signal. And there's no aggression up here at all. They just ran out of steam, and they're so far from the mean. And that's why I said, you know, if we wanted to fight, this is the location to do it. And it's way better than like this right at the thing. And because we can just take a trade back to here, take profits, and then let runners run. It just didn't trigger. So there's nothing to do here though. Yeah, they're going to try to, like I said, trend day up, they're usually going to end the day at the highs. So would not surprise me one bit if they go for that liquidity up there. Not one bit. Will they get to it in time? I don't know. They only have 15 minutes, so. Okay, so this green outline is the exact inverse of this red outline. And so what it basically is telling us is that there is a seller in here. So see this, right? So someone was aggressive on the bid at the lows there. It's by itself, it's not good enough for me. But if the location's right and if I've got the trend going with me, it can actually be a good entry. It's not good enough for a reversal. But if the trend is bullish, I would much rather buy this than sell this. I hope that makes sense. Because when you're trending, you don't have to be right 60% of the time. As long as you're willing to hold for longer than 15 points. And your stop is still 15 points. And in this case, the stop has to go under this one. So it would be entry here, stop there, right? And looking for this or higher is how that would work. Like I said, probably works maybe 50% of the time. The problem is we have this exhaustion, this arrow coming up way up above the channel is an indicator that they need to rest, but this is rest. So if they hold this midpoint, it could come right back up again. But they're just not doing anything. I mean, there's just no one trading here. Like, I feel like it's like a couple retail traders and algos against like one, like, I don't know, one guy just like adding to the bid, adding to the bid, adding to the bid, and then like they fight and the guy settles down, and then there's like, okay, are you guys done selling? Cool, we're back on again. You know, if you look back, that's all it's been all day. Like, since we got that low, it's just like come back to the midpoint of the channel, try to go lower, fail, go higher, like all day. It looks so easy in retrospect, right? It's like, just buy the dips. But to do it in a way that manages risk is honestly very, very difficult. And we'll review it when we close here. I'll show you. There were opportunities. I found 10 of them. So they're trying to defend. The sellers are trying to defend this channel and get back down to this end is what they're trying to do there. It doesn't seem like a great idea, but that's what they're doing. Let's just see again where the volume, it's way at the bottom, that's right. So our volume build, if you're bullish, you need to get above both of those lines. That was not drawn very well. So if you're bullish, you need to see some volume up here. Bullish volume. This one technically qualified, but there's no, it's just a triangle, which is a sign of just some continuation. It's not really, it's not aggression like a star would be, but a green bar here that closed above this line could give you a lift, or a star up could give you a lift. But it actually looks like they just trapped another buyer up there, came down, gave us this red bar again, and are trying to take this level back. This honestly surprises me, but it's the end of the day, you know. It's 2 minutes till MOC. Like, they're probably just gonna trap them one more time. Tempted to take a trap trade back long over here if they set it up, but I can't trade into MOC. That's suicide. But they're going to try to get under this first. I doubt they'll get to this, but that's your next trade opportunity long is here. Okay, so this one, once again, is like right on the line of whether or not that's considered bearish or not. This, if it closes bearish, is clearly bearish. In which case, what I mean by that is that if we get a lift, and then we can look for a retrace for a short now. Okay, they've definitely closed it down there. So any longs should be scalps now. And what we really want is a retrace to short. It's interesting that 2 times in a row they did this with red bars. See that? That's all they got. The algo didn't see anything else worthy of informing me that anybody was getting aggressive. It's almost like buyers just gave up, even though sellers didn't actually get all that active. But the fact that they had trapped these guys down here, and yet they just like squished them like that, like, where did all the buyers go, right? Like, whoever was doing the buyer, like I said, it literally looked like all day one person, one big order had to get full, and I think it got filled, right? It looks like whatever that order was that was filling all day long has finally gotten filled. It's unfortunate that we didn't get that star here, because that was, it made sense. Oh fuck, I forgot to watch an ES. We said ES, so that triggered here, short. That worked beautifully. And then they got underneath the volume build here. So any retrace into this zone that then gets an aggressive response to the short side would be a decent sell. We'll keep an eye on that. That set up better. NQ just didn't trigger. Like, it's interesting. Unusual, but it does happen. Like, it literally looks like on NQ that buyers just gave up. Like, there wasn't even a big seller up there. The only big seller actually got trapped. And then they're like, that's okay, you can have it back. Really, really weird price action. When we close here, I'll show you it on the footprint. For those of you who are used to the footprint, I will. Someone was asking the other day, can you give an example of like what it would have looked like on the footprint for some of these entries? And I am cool doing that. I can't tell you how to build the algo, but I am totally cool with showing you what it looked like, and just to sort of identify it. Like, I'm not going to do the coding for you, but if you just want to see like what does that even mean, like an aggressive seller, like you'll see it. But let's wait till we close here. This is impressive. They actually did take that low, right? And there's just no reaction. It's literally exactly like the open. That is slightly hilarious to me. Because like location traders are like doing great, Like anybody who was just like, I just want to get this liquidity and turn it around. Like you got one shot or maybe two, and like your trade worked, right? So like there's like retail guys who know how to draw lines, and they're looking like geniuses right now, right? And that just doesn't work all that often. I'll be completely honest. Like not on your first or second try, right? It usually needs to like take your stop once, and then like this, literally that stop, that initial high never got beat. I can't tell you the last time I saw that, where you get over yesterday's high, turn around, and then don't even collect the liquidity on the way down. Really, really weird. And my only explanation to that is that the only ones trading up here was algos or retail, and that the guy or couple guys, institutional traders who were keeping this going, just totally gave up somewhere up here. And so when it came down here, probably some retail trader was like, here's the dip, I'm going to put it all in, and just got absolutely crushed. Which is, like I said, I mean, it probably shouldn't be funny, but for some reason it is. Probably like an uncomfortable funny way, because we've all done it, right? Or like we're waiting all day for that dip, and then you finally get it, it's like, there's that trapped seller I needed, and then it's like, boom. But the way this set up, where the VPOCs were right on the volume build, even if this would have been a star, I would have had a really hard time taking it. This one I was ready to take. Like Dom open, ready to go. It just didn't trigger how I wanted it to. You can see that we got that red bar here too, and that one got totally smashed, right? So that's just, it's not enough by itself. But I'm curious to see if maybe it is good enough across from these arrows. I hadn't thought of that actually. It shares a range with that arrow, and the close of the red bar is below the VPOC of that bar with the arrow. See that? It's down here, and the VPOC of that is up here. That might be worth putting that in the spreadsheet and seeing if I can backtest that. That would be fucking cool if that works. I'd be impressed, but that would be pretty neat. They're trying to absorb sellers here. I don't know if it's going to work. They should have just let him take that, you know? Like let him take the low and then attack. Like, why are you coming at them so early when there's like just no buy response this whole way down? Like no one's buying. Like let them take the pivot and trap somebody. You know, this guy's just like taking a stand after they started to give up a little bit. You gotta wait. In my opinion, this is an impulse move. So if this is an impulse move short, you don't want to buy just because they stop shorting. You want to wait until they get trapped. So I would personally not buy this. But if we get underneath it and then rip, and there's like a heavy seller underneath it, yeah, then for sure I'll take it. But yeah, whoever's buying this green bar here, the ones producing that green bar are basically saying this is my last chance to get a higher low, and so if the trend's intact, it should hold. That's the thinking there, I assume. Not saying it can't work, but good luck. We'll see. There's only 4 minutes left, so I mean, I guess we're gonna close in here. Where this big move? Where was all the volume for this move? Wow, way up here. So even if buyers get us back to this level and sellers defend it, it's going to most likely make a lower low on this smaller time frame. In other words, I'm not going to buy this. I wish there was more time because like all day we've had no rotations, and now that we've actually like spread this out a little bit, we might actually get tradable setups here. Which is irritating because the bell's gonna ring in like 3 minutes, but yeah, let me get rid of these. But it's for once we're actually getting some range. I'm like literally all day, all we've been doing is like grinding lower, and then V bottom, grinding higher. I'm honestly lucky that I came out. I feel fortunate that I traded small and that I came out green. I'm part of me feels like I must be getting better at this if I'm not getting my ass kicked on days like this. But yeah, I'm gonna review the day in a minute here and see if it was more luck or if I did something right, because like just looking back at this, it's just like that was tough. Like this is difficult trading. What you have to do is just not trade this. But yeah, this was a tough day. Unless you just bought the low and held, and it sucks because like I said, I actually did get the low. Not exactly, but I got like the bounce off the low. I was long, and just didn't. It did not have the vision that we might go and break yesterday's high. I did see that we probably would get to value area low, but I did not think there was a very good chance that it would keep going, which is funny. The only sign really that it might have gone higher is the fact that there was just nobody trading this morning. That was like the fact that we got here. I'll show you. Like we had no volume compared to yesterday's big open up. We literally we opened below this open, right? And tried to go and dropped from here and had less volume. That was the one sign that it's like, this is a pullback, not a new trend. That was the first, I shouldn't say the one sign, it was the first sign. And so the fact that it was a pullback and not a new downtrend on that time frame suggests that you get some sort of retrace. But I was thinking maybe retracing back to the open, and that they could eventually extend to previous day's value area low. And then if they got into the value area, then the POC might be a target. The idea that we would actually extend higher than yesterday's high, not just yesterday's value area high, but yesterday's high. Overnight high, yesterday's high, like we traded higher than that. After not even we didn't even fill the gap from this day. What was that? Monday night? Like, we didn't even fill this. See that? But we had this purple pivot that it just like tapped, and then we had a bunch of these extensions, and like one of these was bound to work. I honestly thought we were going back here. I thought 11,330, and in this area we were going to see, like, I don't know, some sort of a double bottom, inverse head and shoulders. I thought they would work this for a bit. I didn't think they were done here, personally. And they just, I don't know, they just found a buyer, and sellers were just gone all afternoon, right? They tried to hold this. This was pretty untradeable as well. It was really, really choppy and sideways. Then they broke out. They gave one more trade, and that was it. So, very interesting. All right, give me 2 minutes, you guys. Let me just run to the restroom. I'm going to break my fast with a protein bar, and then we're going to go review the day, okay? So, I'll be right back. Yeah, 2 minutes, max. Alrighty. So, oh, interesting. They ran it back up. Oh, that's fucking funny. The market closes. Yeah, and they actually, I wasn't really paying attention, but they they're trying to run it back up. Well, anyway, let's do the review. Because like I said, I wanted to look at just a couple things. It shouldn't be super long, but let me just look at the candles first, because like I said, people have asked to compare, and then we're also going to take a look at the footprint too. So, all right. So yesterday we had the big move higher in the morning, a nice retrace that held that low, bounced, and then we closed without making a new high. Right. Overnight last night we had a grindy pullback here. So I saw this setup and skip it because I was busy, just wasn't at my. But I was kind of watching it, and so I was wondering if we get a long here. And when it didn't go anywhere, see this actually set up long, on the algo, but it didn't extend past my Voodoo range level. And I'll show you on the in a minute. But when that held, I was pretty sure that we were going to open lower. So by the time this was like London Open, when they couldn't get over this high from earlier, I was too tired to trade, but got one trade in and then went to bed. I didn't hold it. I should have, because it would have been a great short if I would have just held like runners and like went to bed with them. But it's so hard to do that because they like to come up and steal the stop and then go lower. So I just scalped it, got out of it, got a couple points. Remembered that it was Young Kapoor and all that. So we opened here, which if you look is under on NQ, was under yesterday's open and inside of this gap from the day before, right? So we gap down back into a old gap, which usually will result in testing the range here, and if that rejects, going to the next well auctioned area, which is down here. So we did test it. I could have bought this. It actually did set up, but it was at the open, and so instead I took a short, and then I got out of it way too early, and it did come all the way back down here. We were looking for longs here, and we knew to avoid longs in this whole area. We did not want to fight the single prints here, so I don't think anyone in the room really got smoked this morning, but a couple of us took the short and then didn't fucking hold it, which is just kind of frustrating. It's just an execution error on my part, like not being too anxious basically about being having a position when things are going one direction, and I'm just not. It's my it's my C game, right? It's the part of my game that I really need to work on is when I'm right. Being able to go from a mean reversion to more of a momentum position when things work is tricky for me. But we bounced down here. I was looking primarily down here at 11,350 to 11,330. This is the area I expected us to bounce, but we did get a algo signal here that I took. I took it back to this here. And then when they started to pull back, I got out of the position and then saw it rocket up. Got one more piece and scalped some of this basically, but not most of it. So this was practically all straight up. It was very, very, very tricky to get setups unless you were trading momentum. If you're trading mean reversion, it was very, very tricky. Lots and lots and lots of potential stops if you were shorting this. Then they started to consolidate. And what I had said on Twitter was that we really don't want to do anything until we know which direction we're going to go. They did break the high here, and so the reasonable thing to do there would be to look for a pullback to buy. It just didn't pull back. Went all the way to the high. It didn't set up at the high. It almost did. I could tell that we were in an area where we thought we'd see exhaustion. I saw exhaustion, just didn't get any aggressive moves to the downside to follow. Didn't set up. And at the close, it bounced a little bit, but it's now closed back inside of the value area of yesterday, right by yesterday's point of control, which is like the worst place to trade in general because it's going to be really choppy. So I'm okay with my decisions today, with the exception of really three cases where rather than having like a 3K day, I like ended up with like a $300 day just because I wasn't committed enough to the trade to stick with it. So let's go back and I'll show you a couple of these, how this set up, and then we're gonna when we find a good one, we're gonna take a look at the footprint too. So here is yesterday's close, down here, right? So we have that big pullback, what felt like a big pullback, and then they made a higher low and bounced. Okay. There's no trade here. It just ripped. Wait, am I wrong? There's no real trade there that I can see. This is a star all by itself. A pink bar here would make it potentially a trade. Otherwise, we need a location to short that. You can see that now it's starting to look bullish. And so what you're going to see is that the white diamonds will start to be good entries, as long as it stays bullish. Right there. Right there. And right there. All right, so these are all good momentum entries, as long as you're trapping shorts. So those all worked. But you had to recognize early on that this dip was over. That was the harder part. Knowing that, where was that? This dip had ended, because that was basically just like a double bottom. You didn't really have a great way to catch that, as far as I can see. This was the low. Let me just double check and see if we had a DVP set up there. No, you would have to get volume up above this build. Oh, right there. So that's your first entry, like on process kosher entry right there. You can see how these, like, the signals by themselves, right, like the orange bar and the red and all that, when they're positioned in the right place, like the shorts, when they're above the channel, you will get mean reversion often, but you're not going to get these huge extensions. So aggressive traders can take these, right, but they're not always going to work. It's better when they're orange, but they have to be in the right location. Like, you don't really, like, this one is way riskier because you're in the middle of this chop zone, and we're having a hard time getting price to get below the midpoint. And so your target is the midpoint. Like, why would you enter here to get here when you have to put your stop behind it, right? So you kind of have to use some common sense with, like, what am I looking for? If you got short here looking for this gray line, and as long as you're getting out here and here and here, it's all good. But just recognize that you're mean reversion trading, right? You're not looking for this. And that's where people get confused. They're like, how do you have an 80% win rate? It's like, well, because I know what I'm looking for, you know? I'm not looking for the 100-point moves. If I stumble on them, that's cool. But I know what mean reversion opportunities look like. Okay, so there's another one. That one fails. That one just straight up fails, right? So when I see that, we talked about this yesterday, for anybody who was watching yesterday. When I see that high odds entry, like, see, this is a high odds entry. This is the exact same thing, basically. You got the yellow arrow, an orange bar, and a red diamond. This one's also purple, but that doesn't really matter as much here. And they're all, that bar is above the channel, right? When it works, we know that we can take both sides of the trade, like, pretty effectively for mean reversion. But it does not mean that it's bearish. When they stop working, which is here, it does not make it to the channel. See that? And then it stops out. I used to be taking these traps back in. In other words, you trade above it and you come back down with a sign of aggression like that. And I got beat yesterday doing that. If anybody was here yesterday, I took 2 stops in a row on the opposite side of the market, taking that exact same trade twice. And instead, what I should have been doing, if you took it once and it doesn't work, I should immediately be looking for the opposite, which would be a buy signal on a trap. Now this one just like chop, 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 and then finally drops. Oh, and then it traps you. So there's the trap. Diamond into diamond. So it went lower, closed back inside of the diamond range, printed another blue diamond. But you can see that diamond, is there a purple diamond over here that trapped back into it? No, it did not. But this diamond tried to trap back into here and just totally like got crunched up, you know. And when you see this, you guys, when you see this kind of like where there's tons, and if you're using the algo, if you're in the room and you see stuff like that where it's like back and forth and back and forth and back and forth, like just ignore the signals and wait for price to wind up and move, right? So when I be my wind up, we don't want to be trading in here because we usually wait for a bar to close before we enter. And so as a result, you'd be entering here on a long and here on a short, and you don't have any range, right? So for us to leave this kind of like diamond, star, 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 diamond, star, right, where it's back and forth in this like 20 point, 30 point range, you don't trade during this time. When it starts doing this, all you do is you wait, right? You might do it accidentally like here, right? But like I said, we had a hint that it wasn't working, that the edge was decaying here for a minute when this one didn't go far enough. It might have gotten your risk off, but it did not hit target for the mean reversion. And so when that stops out, you don't keep hammering at it, is what I've learned. Instead, you wait for the negotiation here to trap somebody. And so in this case, what I call it winding up for the move. So here we got really, really, really tight. And then you can see the very first move outside of this range got down to here, right? Which is, again, they were right at the mean. But notice how this can't get to the bottom of the channel. And then we get a buy signal here. Well, it's been bullish. So we should be, it doesn't matter how bullish we've gotten or how high we've gone, we should stay bullish until bull trades start to lose. And so far, like not a single, bull trades are not stopping out unless you tried to get long in here with a stop like inside of this little area. But once you see them come out of here, what this is a wind up. They're winding up down here to spring out. So it's the Wyckoff concept is called a spring. But I think of it like as if you wind up like a wind up toy, it's kind of the same idea, right? You get it tighter and tighter and tighter until it finally like springs out. So you don't always know the direction, but what I need to see is a move away from the area to be able to expect, before I would expect that we get beyond the area. Now the funny thing is you don't know if it's, once it's wound up like this, you don't know if it's going to go all the way up and then keep going up, right? Bounce off of it and come back up higher, or if it's going to come all the way down and extend further. You don't really know. And so to deal with that, what I'll do is when I see this, I won't trade it, right? I'll wait for them to break the range, give me a trap trade like this. I will long it for 15 points, target just above this, and then wait, right? And if I get a short signal up there, cool. Target 15 points coming back down. And one of them is going to fail right there. This one, 15 points down, right? The runners do not continue. So my runners get stopped out. Guess what? It's not bearish. That's what my expert analysis would tell you, right? Once that one stops out, you know that these were the guys that got trapped. And so it's not just gonna, it can go up, test these, and then rush down. But once you've trapped sellers down here and they make an attempt to push and they're not able to free these guys, you can be pretty confident that the bull, especially when it's been bullish, right? We've been going up and this was just like kind of a consolidation. When that same team gets a higher low now, you're probably good to go. Now, if you want the setup, that's the explanation, right? The setup, what it looks like, is you take the volume of this zone. So it started at the bottom of this range, of this wave, sorry, up here, and it continued up until this one, so right here. So there's your volume build right here. Okay, and so what we need to see once we know which side we want to be on, which is bulls for extension, right? And you don't know that until right here. You have a hint of it here. This is, if this was bearish, this move would go all the way under this. And so when it doesn't, and it's been bullish, and you get an algo signal with the close above the volume build in the direction of the trend, it's going higher. So that's how you that's the way you trade that information. But what really matters, because it's kind of an advanced trade, what really matters is that you don't try to trade all these signals and you can basically ignore them and just assume that if you mark off this entire area, it's going to be a pivot later on. So watch this. If you miss this, then observe what happens when we return to the area. I don't know if this works right away, but it should eventually. There's no short up here as far as I can tell. We can see if there was a... Oh wow, all the way down here. So to get short, we need to develop volume under this. So this is a no-go. This is a no-go. None of those are shorts. Does not develop bearish volume below our volume build to the high. This guy getting aggressive at the highs is definitely a concern, but what I basically want to do now is watch that area. So we're going to mark this off in red. And I want to see if I can get that spot to hold, but like I said, I'm not totally sure. I haven't reviewed this yet. But you can see that we came back to the volume build. They tried to get under it, but note the volume, the line of the VPOX, cannot get below this pink line. That's a red flag right there that you should not be short. Okay. So I wouldn't want to short this. They get stopped out. See that? The buyers don't try again. They get beat. That is your short entry. It's interacting. So again, it looked like it was going to bounce right here and right here. They tried to bounce, right? Anybody who got short here and put their stop above that bar got stopped out right here, which is just the way it works. And that's why you wait until, because see, this high volume area is going to be choppy. You need to wait until the bears develop volume below it before you can expect to actually have a low risk, high odds entry here. Otherwise, they're going to take your stop. Now, could you short this and put your stop up here? Sure you can with like 1 micro, right? But that's 40 points. I only want to risk 15. So if I want to risk 15, I'm going to miss this entry and I'm going to need to wait for this one. Because this one, they develop volume underneath right here. There's bearish volume below the volume build. That's why we need it to be bearish. They then retrace and they defend it and give me a sign of aggression. Now, the one concern here, we're returning to this chop zone, right? Which I marked off for a reason, because the bulls took control here. So they're probably going to try to defend this. Right there. Right? So if I was short here, I'm already taking profits because I got through this VPOC and I know that all the volume here, if you remember, the volume here was like right at that blue line or so. So once we trade under it, and especially if I notice that the VPOC here is not at the low of this candle, or if I wait for this one, which is a high odds entry on the long side if it's bullish, especially if it's a higher low. I'm definitely out of my short. If you want to long this, you could. It is a high odds entry, but we saw yesterday that if there is resistance above you, this doesn't always work on the first try. In this case, it looks like it's good. Interesting that we got once again the blue arrow with the green line. But we got the outline here with the blue arrow too. So it's not by itself good enough, but it does seem to show up a lot at these pivots. They tried to defend it with stars, and they got beat. So that's a sign of momentum to the upside. So basically, price came back down. It retested this area that was negotiated well. Bulls won that negotiation. When they returned, Bulls defended it. That's all that is. Okay, they returned to this zone that I said looked like it needed some more negotiation. They try to defend it with a star, and that star gets killed, right? Where are we going? We're going to go get liquidity. There we go. Collect liquidity. Someone tries to be aggressive. This is why I don't want to be the first one to short. Because this is what's going to happen most of the time. This is what I expected to happen at the end of the day. Right? They test above the high. Someone aggressive comes in. Then they put in momentum. And it continues higher. So this is the open. We opened RTH right here. Someone tried to short that area. That was important pre-market. They ripped through the high. Someone tried to defend it. They got big momentum coming in, trapping a big volume seller, right? So at this point right here, what we should be thinking is it's still bullish. Okay, that should be the thought. I don't think any further than that, personally, because I'm only looking for scalps primarily. But I'm not thinking like we're going to go to the high of yesterday's close or whatever. I'm just thinking there's liquidity here. We took it, and buyers aren't settling down. So they're not done. That's all I know, right? And so they do go up for one more bar. But if you look, volume actually decreased on this bar, so they only went down in price. The volume point of control was lower in price on this triangle bar than it was on the green bar. That's suspicious because it means that price went higher, but volume went lower. Then when they tried to get volume to go higher, in other words, the yellow line goes up, price came down. And in this case, it's a purple bar with a red outline. And so what that, like I said, you don't need to know this, but what that says is that there's a buyer near the high that's trapped, and there are buyers pulling their orders on the DOM that used to look like they were interested in defending this level, and they no longer are. So if I am long here, because it looks like we're sucking up liquidity, and I see that bar, I am going to exit because as long as I've hit that first, I think I got 15 points there. I always hold for my first 15. Might not have gotten it. This is a pretty risky long as it was. 58. Nope. Okay, so I would not. So the way to think about this is, personally, I wouldn't exit because I haven't been able to take profits yet, and I can't just bail on trades. But I'm definitely not going to be confident right here. I'm expecting this to fail most of the time. I don't think you can really short it just yet. But if you want to know when you can short it, you take the wave from the bottom. Whew. The VPOC on that is way down here. No, it's here. Okay. So we need to develop volume below that, which they did not do. See that? So my long, if I would have been really aggressive and longed this, my long gets stopped out. They come back in. This is what we call trap back in. And if you're trading with the trend, it usually works for 15 points. But again, you're way, way, way high up near the top of the channel, so it's pretty risky. I personally did not take it. It happens to work, but it was risky, right? If you didn't short this, and like I said, I don't think there's really any reason to. I think this is much better because you've now developed a power bar or a pivot, which gets an extended red line on my version of the algo. We tested above it and then immediately came back down with algo signals, right? Orange bar, yellow arrow, both of those, indicating that there's some absorption going on up here and that there's aggressive sellers putting orders in, and causing volume to shift down, right? Despite them trading above this. So it's like, once again, we came up and sucked up liquidity and someone hammered it, right? So this one is much more likely to get 15 points than this one because we've traded above a recent pivot and then shifted volume down rather than just going up, 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 volume shift. Like, we don't really know if that's going to drop. Right now, we don't know for sure that we can sell rips until we get under this. So this one, this is why it's hard to trade in the first 30 minutes, you guys. First of all, it's fast, and it can be frustrating if you get a couple stops in a row. But 58 to 48, that barely would have gotten your risk off if you were taking 10 points. I usually want 10 to 12. And 1 to 1 would be 15. So in some ways, you could say that failed too, right? So this super aggressive move that I wouldn't recommend fails to short, and then like this one doesn't work, and then because it's too aggressive, and then this one kind of works, but not to the point that you'd think. So already we've got shorts not working, and then even the longs are kind of questionable. So within the first 10 minutes of the day, we already knew, okay, something's up here. There's not a lot of range on these rotations. We're not getting the 15 to 30 points we usually get. And even the trap trades aren't really producing much. So already, we weren't trading them live money, but we're all watching that first couple minutes, 15 minutes or so, and just deciding what kind of a day is it going to be? Do we have a good edge today, right? Is this the kind of trading that we want to see? This is not the kind of price action that a mean reversion trader wants to see, right? The other way you can determine that is by looking to see if momentum trades are working. And I would say, I mean, they haven't really set up much, but I bet that long momentum trades are probably working here. So fighting this trend is not going to be a good idea. We get to the Voodoo range level, and they have lots of volume on this bar. See that? Lots of volume on this bar to the high. And then they trap them quickly, which is what that red diamond says. So again, it could be the high. I'm personally not taking those aggressive shorts, especially after they didn't work twice. But yeah, it gets 10 points and they immediately rip it higher. And that's, like I said, that's why you don't want to always take these aggressive reversals. But something of note is that they're not reaching the midpoint here. The mean is this midpoint. They're not reaching it, right? Sellers are trapped. There's no question about it, and there's no reason to be aggressive. Note how all of a sudden the channel starts to go up exponentially, and price is no longer bouncing off the channel. So once this happens, and it just happens to be right after a retest of the Voodoo range level, I'm sure that's coincidence, but once this happens, all of a sudden it's just going like sky high beyond the channel, right? This is the first sign of some possible exhaustion. It's not a short, right? But if I was trading momentum, if I had identified that I wanted to be long early on, and I was just going to buy any white diamond or any white star or any green bar, if I was going to, trade like that, or just find location, find an aggressive trader and follow him to the long side, I would stop doing that right here. Right here. Once we start getting away from the channel just starts going crazy high. And the indicator that I have for that is this yellow arrow showing up on a buy bar well above the channel. Right? You can see back here, this one was on a sell bar inside the channel, not the same thing. right? The location of it matters. This one on a sell bar inside the channel, not a sell, right? They're not a sign of exhaustion. These, not a sign of exhaustion. It's inside the channel. That's normal, right? This is abnormal. And I might eventually just get rid of these other ones if I'm not finding them useful and only have it show up, because this is when it seems to be the most useful. And what you'll see is when you get the next sign of the next signal to take a mean reversion trade, especially if it also has an arrow on it, that this is actually a very good trade to get you back here into, like, out of the stratosphere, right? And so that triggered beautifully, and it was right after the econ came out, so it was very tricky to get. You had to you had to know that you were looking for it, and this bar filled too fast, and so I had to wait for this retrace and trust my system, right? That I knew that that was the time. I had to know that that was the time to fight the trend, right? I had to have those signals there alerting me that even though I hadn't been fighting, that now it's got a chance of exhaustion. I might be able to get some mean reversion here, but I want to get the best price possible because my stop has to go up here. And so, like I said, I would have loved to get short right there, but I waited because it was too fast and ended up getting it on the retrace in here somewhere. Now, the mistake I made, well, I don't know if it's a huge mistake, but what I decided to do was when I saw this bar being pink and the fact that they didn't reach the midpoint, which is my target, I bailed on the trade on my runners. I had already gotten my profit target because if you look, I was getting short at, like, let's just say like 50. I think it was actually higher than that. And we had gotten all the way down to 28. So we'd already gotten my 15 points. I just had runners. And as soon as I saw this pink bar, this bar start to form, and it was pink at the time, and it had not touched the midpoint, I knew that there was a good chance, or I believed that there was a good chance that we were going to head up here and take this liquidity. What I didn't think through at the time, that I'm thinking about now, is what I should have done is, as I got into the trade or right before it, once this red triangle forms, I can then measure where all the volume is, and I would have seen that it was actually way down here, meaning that even if it's still bullish, we could actually get a test all the way down into 11,600 before we actually go get that liquidity. So in this case, it did save me, right? In this case, like, the results were that I was right. But after this happened, and it actually gave me a re-entry opportunity here. But after this was correct, this read was correct, I thought I measured this because I was wondering if I could get short here. And I saw that all the volume from the move up was way down here. And I was not sure how to handle that because my thought was, okay, we've just now collected liquidity. It's very possible that we're headed towards that volume build. But I don't have a signal for a reversal. You can see that this wave here, oh shit, that's wrong. That wave there, it's still going to be about right. Should be here. So this volume build, to get things rolling, needs to get a bearish close below that little area. And you can see that this one did not reach it, even though it does have the arrow, it does have the red line outline, and it is orange, and it does have a star. Like, everything about this bar is good, but the location of the bar relative to the volume on this pullback suggests that even if they get aggressive here, they're not necessarily going to have any success breaking this low. I don't have any high odds, predictable way to trust that this low is probably going to get broken until we get a close below this volume build. That's what I'm trying to say. So my choices are get short as high as possible because I've gotten the scalp signal, try to get filled again at the midpoint, and then leave a runner for this. And in retrospect, I kind of like that plan. And then the other option is the more conservative option, which is just wait for the signal. So I went with option 2 and did not take this short. But in retrospect, everything about it is good, except for the fact that we have a volume build right underneath the entry, right? Everything about that is cool, but the thing is since we got this one, what I could have done, since my stop, no matter where I get in, goes there, I could have easily, and with a good size, I could have put my buy order basically right under it, right there. At the high, any of this wick, I could have taken it. The problem is that all of a sudden you could get like insta stopped, right? But your stop is going to be like 5 points, 4 points. So I could risk 1R, and rather than taking like 2 contracts, I could take like 4 or 5, technically, like big contracts, right? And then it just rolls down beautifully. So it worked. I just didn't see the opportunity quite as well as I should have. Because really what this is, it's a trap back in, right? In other words, we traded behind a power bar and then closed back inside of that power bar. The power bar is this little flag sideways triangle here, and it's associated with this bar that's orange. And you can see this one got one too. But when we trade behind them and close back inside of them, especially if you get another signal of aggression, that alone is a good sell signal as long as it's not trending in the opposite direction. And like I said, I had already gotten the exhaustion signs, those little arrows, and we've gotten a pullback, but it didn't get to the midpoint. It literally missed it by 2 or 3 points. But the way my brain is it's like, I don't think like, oh, that's close enough for hand grenades. My brain says it didn't hit the midpoint. It's still bullish, right? We're probably going to take this liquidity. So what I wanted was for this to get broken or for this to get broken and then to get a signal. So, like I said, I did not take this pullback even though I probably should have. And I like it in retrospect. I just didn't take it. And so instead I took this one and got stopped, which was frustrating to say the least, right? It's irritating to take to get that stop after seeing everything, making the right call, but basically just not entering in the right way. Because where I should have been short was on this purple bar, and instead they printed another one, and like my brain was just like, we could easily get down here, and we've already now developed volume below the volume build, so this is the retrace and this is the short, right? But the bigger picture is this, and that says any volume builds in here can act as support. It's really as simple as that, primarily being this one. Oops. This one here is your primary support. But all of these volume builds can act as support. So while this is a good risk reward short, being able to put your stop above the high of the day, right? You can easily get 20 to 50 points there most of the time, as long as it's not super bullish, and we already identified how we knew that it wasn't. So this is a good short. This is a actually super aggressive short because we're at the bottom of the channel and there's no sign that it's bearish. If anything, it's just balanced. So while this is a sign of bearish aggression, it's not located in the right place relative to what we've been doing, which is basically the channel. Because that's an ATR channel. It's based on like the ATR. I'm not going to give you all the settings because that's proprietary, but it's basically saying that most of the volume should be firing off inside of this if it's balanced. So when the market has a hard time getting or staying outside of it, like this, it's probably balanced or bullish, right? Whereas if the market has a hard time getting underneath the midpoint of it, it's probably bullish, right? And it's not balanced. It's exactly the opposite. You can see here, period of balance or consolidation. Clearly not bearish because you get a buy signal right at the bottom. And then when they try to sell it at the top, they fail. So it's, whoa, what did I just do? That fucking sucked. Let's see. Hold on, I know what to do. Sorry, guys. We're going to close it and reopen it. That's why you save every once in a while. So close. Chart. No. Cancel. Oh, yeah. No. And then we're going to reopen it. Open. Okay. I don't know what I think I must have accidentally like grabbed the window and hit like, I don't know, did something. So this is just gonna take a second to load. But it's this one. Okay. Oh boy. It's gonna take a minute. Sorry guys. We don't need all these. If anyone has any questions, this is a good time to ask. This will just take a minute and a half. Better only have 5 bars. Let me just show you what today looked like on ES. You can look at the exact same thing on Simon's, but on ES, there's the high right here. So on ES, 6 tick, let's do 8 tick. On ES, 839, here's the high. So on ES, we had ES was different. That's right, they diverged. ES topped out right out of the high, gave a short signal, and then at 9, we weren't making a new high. Wait, is this the same day? That's so weird. Yeah, we weren't making a new high. So NQ was making a new high, and ES wasn't. Interesting. Is that possible? Am I on the wrong day? Hold on. Is that right? So weird. Yeah, NQ definitely did not. And ES, ES definitely did not make a new high. Oh, NQ didn't either. So it wasn't a high of the day. It was just a high. I must have just been too zoomed in. It wasn't a high of the day. Wow, it's taking forever. So it was just a high compared to something previous. Unless I was doing the wrong day, that'd be funny. Doesn't matter. It's almost the same. The signals don't change. So on NQ anyway, we had the signal here that if it's see how it's balanced here. Anytime it gets outside of the channel, it comes back to the channel, right? Like that's the simplest way to think about it. Like this is balance. I might have been on the wrong day. That's funny. Strange. All right, so yeah, on NQ, sorry, ES, we're balance coming into in the open, and even before the open, balance, right? So all of our signals, like orange bars at the top, especially if there's a pink bar too from before, those are going to work, right? Now this purple bar, green bar didn't work, but this green bar definitely gave you a lift, located at the right place. This orange bar was a short. This one didn't trigger. This orange bar is a short. I mean, you could make this very simple if you want, right? But then you have to know that when it stops working, see how this green one didn't get you anywhere? Now you got to know when, like right there, that's a problem. That's not balance anymore. You're getting those signals and they're getting extensions even though you're not at the top of the channel. So now you stop looking for lows. You stop looking for bounces. So this is no longer along. And to get along, what you need is a very, very, very good trap that has space to get back to the midpoint. See, this one, it could work, but I bet you it doesn't get past the midpoint. See that? So the risk reward, it's a valid trap. The risk reward is poor, but it's a valid trap, right? And the better play here, once you've identified that longs aren't working and the midpoint is holding, you can't get anything to go anywhere to the upside. If you know to short that, great. If you miss it, short this, right? It's as if the whole thing shifts down because now we're going to do most of the volume on the bottom half or below the channel, Of course, that means you're going to miss longs like this, right? But the good news is that they're only going to go to the midpoint, more likely than not, until you get a signal that it's done doing that. And so the signal that it's done doing that, you're not going to catch this. You have to be okay with not always having the very first trade, but having a much higher win rate for the trades you do take. So you're not going to get that. But once you see this, and it's like, oh, look, we actually traveled back through the midpoint. No, actually the midpoint's missing on this one. So this is Simon's primary. Hefe, this is Simon's primary. This is the trade and perform algo that we look at in the room. I'm waiting for this guy to load, which is my version of it. I accidentally fucked it up, but I was able to redo it. So let me add the midpoint. He doesn't have his midpoint showing. It's just too many lines for people to follow, but I like it. So hold on real quick. Let me get her going here. Blue, orange, average. We're going to do a line. Whoops. I will show you. And we're going to make it gray because that's what mine is. And we're going to make it thin. There's your midpoint. So that gray line is the midpoint. And if you want to think about it, the way these channels work, which Simon calls a radar, but it's basically just like we took like ideas that are kind of already out there that people use, like typical indicators, and just kind of like tweaked it, right? And so it's just the same concept. You could use, Keltner channels or Bollinger Bands or standard deviations, right? There's all sorts of ways to measure like where the mean is. And so the mean is basically this gray line. And there's like if it's balanced, you're gonna stay inside of here most of the time. If it's bearish, you're gonna have a hard time holding the price above the midpoint. You might peak above the midpoint, but you're not going to get volume developed up there without shorts attacking you. And then on the opposite side, if it's bullish, you're going to see it stay above the midpoint like this. See how it can't get back to the gray? Right? And so the easy way to think about this is first you have to know what phase you're in. Is it balanced? Is it bearish? Is it bullish? If it's balanced, all you need is trade signals like this, which is like they're too far away here because I haven't adjusted it, but I don't really use this one to trade. You need that to show up in the right spot, which is under or at the bottom of the algo of the range here, and then you'd take the orange ones to go short. You would not short this; it's on the wrong side. See, but if you were bearish, this works. Does that make sense? Like it's at the wrong location. Like this is upstairs and this is downstairs. And if you're buying in balance or when you're bullish, you buy downstairs and you sell upstairs. But once you are in a bearish condition, so here, sell upstairs, right? Buy downstairs. Sell upstairs. Don't buy, right? This one is not a buy. It's upstairs. This one is close, right? You might get a little something there, but it's not great. This one is good. It just doesn't work. It's not 100%, right? But when it stops working, you pay attention because now it's bearish. So now you make your stop back by shorting downstairs because now it's bearish. And now you can short. You don't buy this because it's bearish. You short this. You short this, right? And no short here, and you just don't long. You just wait. If you're long only, you just don't do anything, right? There's no. Oh wait, there is a short. It's the star. That's the short. So stars or orange bars, to make it really simple, are going to generally be like, if you're just starting with the algo, right? You're not going to get an 80% win rate doing that, but you're going to start to get a feel for like what phase is it, what should I be looking for, And then for the next step is like, okay, let's filter some of those out because like there are some signs that it's going to stop working before it actually stops working. And so there's like next level, you know? And then eventually it's like, I don't have enough signals to tell me those signs, so let's start building more. And across like along like a year, 12, no, 14 months of this, and eventually I was able to develop like additional signals that will warn me when to switch, right? But it's the same thing, it's just more. Okay. Yeah, so it's so the if you're really new in general, you've got a huge advantage to those of us who have been trading this for years and years and years, right? Or trading with like a footprint. If you've been doing this forever, right? Like the problem is if you didn't have a set edge with a process of how to determine when you get into trade and when you don't, you have all these bad habits and intuitions that you probably shouldn't be trusting to make decisions, but we all do subconsciously or sometimes consciously. Whereas if you're actually brand new, like especially like the simplified algo, the one that Simon teaches on, like I said, this is just my own like bastardized version of this, right? Like I just took this and kind of ran with it and customized it because I just know what I need. But if you've never really, if you haven't learned like how to read a profile and how to how to like general technical analysis stuff, this is where to start. And you basically that's good. You don't want if people can't, I don't know if they'll be able to see the chat that later on if I leave this recorded, but he said I don't have the intuition of when or how indicators like yours work, and I know it feels like a drawback, but believe it or not, if you have access to a process that has good like that back tests well and forward tests well, that you know and trust actually works, the lack of believing that you have that intuition of when something's going to work is a huge advantage. Because what I end up doing, and the reason why I need so many more signals, is I analyze it and say, okay, I know it says I'm not supposed to buy this, but like in my mind I'm like I'm sure that it's got to be done now. This one didn't work, and you know I can measure all this stuff, and like you know I'm gonna keep looking until I find a reason for this to get to be okay to long, and then get stopped and get pissed, right? And then like miss the actual long. And the only reason that happens is because I have been trading for so long and without a process, right? So time in front of a screen or trading experience, it doesn't do you any good if you're not following a process. All you're doing is teaching yourself bad habits, basically, how to trust things that you don't know if they work or not. And so in my mind, when I'm like, and if you watch me trade, you'll even see like I'll have a totally valid setup. Like let's say I'm shorting like this orange bar here, and I know I'm supposed to do it, right? It's like this green bar worked, we're in balance, everything's lined up, I'm good to go. Like the moment this gets any, well, this one doesn't have any pressure at all, but if it let me find one that has a little pressure. Like I'll get like this little bit of like this. Okay, let's say I'm like, okay, it's bearish. We can't even get to the top of the channel. We got underneath the channel. I'm not going to buy. I'm probably going to avoid this. Okay, now, is this bearish or not? The process says, yes, it's bearish. But in my mind, I'm like, but is it bearish enough? Is it actually going to work? And then when it does that, I'm like, you know what? I'm out. I'll take a $20 loss. And then it does this. Right? And then I get so frustrating with it. So frustrated with myself for like not just trusting that the process is the process for a reason, you know? And like, or another example of what people do on like to make mistakes, the process says get long anywhere in this zone, anywhere in this range, or sorry, get short anywhere in this range, but your stop must go here, above it. It must go here, right? That's where the stop has to go to get because that's what the back tests are based off of when we say that it works X amount of times. The stop is placed behind the bar, right? And so when you get this and this, and you're like, you know what, I'm gonna take a small loss here. What you're basically doing is you're putting your stop right here and getting in here. And if you did that before you knew what was going to happen, it should look ridiculous. Like, considering that every single stop that we have, every single setup, the stop always must go behind the bar that you're getting in. Like, it's built to be simple. You don't have to think about where the stop goes. It literally just always goes there. And so if you're like, oh, I want to get out of this trade here, it's like what you've done is you've changed the process into something that probably doesn't work just because you got nervous that you think your stop's going to get hit. So to avoid the stop getting hit, you're taking a loss. When in reality, most of the time, it doesn't get hit. Sometimes it does. But if you have like traumatic experiences over and over again of like setting your stop in the wrong place and getting hit, you start to it really is like trauma. Like you start to make these bad decisions that are like, it's your brain avoiding pain, but as a result, you're actually not trading the system you think you're trading. So and like I said, that's why it's actually sometimes a benefit not to really be able to read like what's happening and just learning like, I'm going to learn one setup and just one setup. And so every time I see this happen, I'm just going to do it. Will you have an amazing win rate? No, but you'll survive with the process. And you'll learn and start to notice, like, for instance, like you're like, wow, that short really worked. Wow, that short really worked. Wow, I totally got smoked there, Well, the good news is, this short, you got, I don't know, how much is that? 12, let's say 12 points. This one, you got potentially 12 points, let's say. And this one, you lost 5. Right? So up 24, like you're up like 19 points in ES on a string of 3 trades, and you can start to look at it and be like, wait, is there anything I could have known? How might I have known that it was time to be done? And then like my coach would tell me like, well, believe it or not, there's a bull trade right here. And so when you're getting short here, you've got a high odds buy right behind you. So you don't have to take it if you don't want to be aggressive, but you might want to skip the short when we know that this continues higher more often than not, right? Whereas these didn't have that setup working against them. So it doesn't mean you have to know all of them. You don't have to know all the setups. But once you start to learn more about when 1 or 2 setups work really well and when they don't, what you'll learn is that the reason they're not working, you actually have an edge there. Like when they stop working, you have an easy response. It's kind of like if you've ever learned how to play like chess, right? Like at first you learn about how the pieces move, and then after that people might teach you like an opening, right? Like this is the process of how you get your pieces in the right place. And then after that, it's like, hey, let me show you these cool tricks where you can put together a rook and a knight and make them like, attack a queen, and then they're gonna have a really difficult choice to make, right? That's exactly how you should be learning most processes, including trading. Like you don't start by trying to memorize all of the setups and learn exactly what every one of these bars means, and you don't want to worry about the fact that it's like, I don't know if this bar is bullish or bearish. It actually doesn't matter. You don't need to know that to win. What you do need to know is, what am I looking for, and when do I stop looking for it? And then once you get good at that, then you're like, hey, I should probably look for some more opportunities because I'm only getting 3 trades a day. So maybe I'll learn another setup. And then you realize that setup is like an opportunity that you normally would have actually been fighting against, right? So like I said, if you were taking shorts here and winning, and then you take the short and you lose, yeah, you only gave back 5 points. But once you learn that this is actually a long, you're going to stop fighting, you're going to stop taking this short here. And so the result isn't just that you get a new setup and, that you make another, what is that, 20 points. You also didn't take this short because you would know better. And you'd also be ready to take this long and get another 10 points, right? So it is a process, and it does take time. Like, the learning is not overnight. But the cool thing is that over time, like, even with just these few signals, you have so many opportunities, and yeah, like, day in, day out, being with a group of people who are all looking at this for the same setups, and you're like, oh wow, that really worked, I want to learn that, and so then you study that, right? Like, if someone was like, hey, here's what I'm doing, I'm looking for this specific setup, and I'm buying that bar, and then targeting the other side of the channel, and you're like, wow, I want to learn how that works, and then you start looking for that trade. So it's a step-by-step learning. Yeah, agreed. And I still do look at, I've got a couple screens, I still do look at the candles. I do. The candles are still helpful because you can see things in multiple time frames, and you can often see support and resistance from like previous sessions pretty easily. So like, here, let me just take off all these extra stuff. So if I took all of this off and I just like look back here, we don't actually need all these. I can read all these. So with the candles, I can be like, okay, we're in an area that there was liquidity, and so if I'm going to fight this trend, this is a good spot to start looking. Like that, the candles can tell you that once you learn how to read them. What the candles won't tell you is, should I short right here, or should I short right here, or should I short when it comes back up, or have I already missed the short opportunity? Like, if you trade with just candles, what you'll find yourself doing is, in retrospect, it's going to make tons of sense. It's like, oh yeah, I got up here, this was the perfect short. But by the time you know that, you don't know whether or not you have an opportunity to actually take action there. Now, I mean, that's not always the case. If you're fast enough, you could see it on the 30-minute, go into the 5-minute and maybe catch this, right? I'm not saying it's impossible, but what happens a lot is you just don't know whether or not your opportunity is done or not. It's hard to know whether or not you can short the next one. Can I short the next one? Or like, should I buy this? Or do I buy this? Right? Like, decisions like that. Dots on the chart. What color, FA? On my candle chart, you're talking about these little orange, the orange dotted line? That's previous close, so that would be the close of the day today. Or is it yesterday? Yesterday's close. Yesterday's settle, I think it is. If you're talking about this little orange, the dots here is the current price. The white one is current price. Orange dotted line is yesterday's close, which you can add if you use TradingView by going to settings, previous day's close, price line, and last. That's what those are. I had some fibs drawn in here, but I don't think that's what you're talking about. But if you're talking about the fibs I drew, those are dash lines, I think, but that's something different. Those are just like levels I'm watching for interactions. So yeah, that's what you're... And rectangular purple. Okay, so the purple... Have you watched my video on the Voodoo range? Have you watched that? I think it's called like precision targeting with the Voodoo range. I explain my lines, which are these lines. I explain where these come from, and then I also explain something that I call decreasing range and volume pivots, and that's what the purple is. Do a Google, or I mean, if you subscribe to my YouTube, do a YouTube search for Voodoo range like that, and you'll get a. You could probably just do a YouTube search for that in general, and you probably only find one or two, unless someone else is talking about it and I just don't know about it. But it's my own proprietary system for finding targets and determining like on a higher time frame like where I want to be watching the market versus like where I don't want to be watching the market. They're not necessarily trade locations. It's not a trade entry system, but it's a system for targeting. And in that system, or in that video, I talk about how to build these purple rectangles and what I'll show you real quick. What you do is you look for. I usually do them on the 30-minute chart, but you can do them anywhere. And with a regular candle, what you need is 2 consecutive candles. One that is green and the other one that is red. It doesn't matter which one is which, but the second one needs to be smaller in range and have less volume than the first one. So it's decreasing range and decreasing volume, but going in the opposite direction. Right? So this one is wrong. This would have to be red. Oh, I see why it showed up because this didn't close. This didn't open where it closed, so it's okay. Hold on. Did I fuck with this? I don't think I did. Colors based on previous close. There we go. I must have accidentally unchecked that. That's fucked up. Okay. So yeah, that's what you should see is like one candle that's one color. The very next candle has to be the opposite color. And then the range of they don't have to be inside. This one doesn't have to be inside of this one, but it's got to have a smaller range than the first one, and it has to have less volume. So here, one candle that's green, next candle's red. The candle's inside, so it's clearly less range on the second one, and the what's it called? The volume decreases. Now, why isn't the volume changing based on close? Hold on. This is wrong. That's not right. Yeah, interesting. This one's suspect. I'm not sure if I maybe drew that on the wrong time frame. Let me just see. Is it reacting? What you should find is that you get reactions there. It's not going to like stand in the way of a trend. Yeah, but you'll get reactions. And if you want to know it's secret, let me find one that is interacting right now. No, it is this one. Okay, so one cool thing you can do. Do you have TradingView, Hefe? Or Sierra Chart? You could do it on Sierra Chart too. So once you've found one of these, this is not a perfect example because this one is green and this one is green. This one should be red for it to work. But what you would do, it happens to work because there was a gap here. But it's technically not exactly how it's supposed to look. It's supposed to be green and then red, or red and then green. And then it's got to be decreasing volume. But what you can do is measure the volume profile of that consolidation, which will give you... I have TradingView. Cool. So they've got this fixed range volume profile hiding underneath the long position, short position on the taskbar over here. I use this all the time. And again, all I did was I'm going to pick those 2 bars, hold it down, let it go, and then I've got so that's going to give me the volume profile for just that bar, those 2 bars. And what I'm going to be able to see here is where the point of control is. That's going to be blue. And then where the majority of the volume was, which is here to here. Here, I'll make this one a red. So the red one is the VPOC. The blue ones is volume area high and volume area low. You can be as OCD about that as you want. What you'll find is that those lines will be rather precise. It's not that it's going to bounce every time, but if it reacts to those lines, you're probably going to get you're going to get a pretty big reaction. Let's put it that way. So here, let's see if we got any reactions over here to these. And they're good for quite a while. There we go. So this one overdid it just a little bit. This is pretty good. So I wouldn't know here that it's reacting, but once it's gotten above it and it fails to hold it, I already kind of know that, like, there might be a scalp here. Same exact thing with this. Trades into it, rejects out of it. I already know that I should probably not be trying to get long here. I won't know for sure until it closes, right? But, I mean, even if you see this and then it closes, and then you see this, then you could short it right there. You know, this is like your hint. I mean, honestly, this was a hint too, you know. Tried to get above the volume area, rejected it. Now it's rejecting the VPOC. Like, it's already any of these. It's like, just to know that, like, whatever the bearish momentum was going, they've run out of momentum for the time being. It's just, you just need to remember that it's on the time frame that you built it on, right? So these are 30-minute candles that I'm making these pivots with. Here, we can do the same thing on this one. These are 30-minute candles, so you know it's not going to work for stuff over 30 minutes. It's going to be smaller time frame. But if you did it with a bigger one, you could. Oops, I did not want to move that. You can do it with higher time frames then. So there's the VPOC, and then volume very low. And volume very high is, where the hell is it? It must be, is it right where we are? Hold on. I don't see volume very high. Oh, it's covered up by something. There it is. Right. There. Okay, so now we would look for, so remember this happened here, right? Market can't close below volume area low of that consolidation, goes higher. Market can't close above volume area high of that location, goes lower, right? 30-minute chart, like not for weeks, but for 30 minutes or less, right? You're probably going to get a reaction. This one actually closed above both of them, but then it went to this one and rejected. And it was sneaky because it came all the way back up again, hit the voodoo range level and rejected. So this one you didn't really get any opportunities on this time frame. And then when we came back to it, did it react at all? If it's trending, it's not going to work. These won't work in the face of a trend, unless the trend is exhausting. Oh, there we go. That's kind of nice. So tried to get into the value area, rejected. Probably going lower on the 30-minute chart. And then, I don't know why I made it stop. Let's see if it still works. Sometimes when you leave the area and come back, they don't always work. Oh, interesting. So they closed right below, but you can see they didn't really have a reaction. It just kind of ran right through it. So this is what happens when you're trending. It's like it might pause there, but it's not just going to turn around the trend because it ran into like old resistance. That's not how trends work. Like trends can keep going until they exhaust, right? So it gets above it, exhausts below it. A little bit of a reaction there. Oh, that's kind of nice. That looks like that might be significant, right? This one just blows right through it. I think that's probably why I deleted it, because it was no... Yeah, see, once it starts passing over it back and forth like this, I will stop using it. But this one did reject here. It's obviously not 100%. But if you wanted to limit your trade locations to just when you had a reaction here, you'd probably do okay. It's just that eventually it's going to blow it out, you know? And then I don't know how to deal with the fact that you have so many here, other than to expect lots of choppiness. The process is, first of all, finding the pivot. So looking for green bars followed by red bars, or red bars followed by green bars. So the second one, this one is almost it because it's got decreasing volume, but the second one has a bigger range than this one. So that one doesn't work. Let me see if we have one recently. It's got to be deep. It's got to go green then red, or red then green. Right here. Green then red, right? This one has less range here than this one, and volume decreases. So now take the range of the whole thing. I'm not sure which one of these are higher. Looks like this one's higher, right? Extend it. Oops, too many indicators. Extend it. Okay, then use your fixed range volume profile tool. Choose just the first two candles, the ones that you use to create the pivot, which will give you the volume area of that pivot, as well as the VPOC. So then I want to go value area high right at the top, value area low right here. Whoops, and oh, that's not the one I want. And VPOC. And so now inside of that volume, that pivot, I can specifically look for reactions to those lines or tests above it that just fail to close above them. But the edges of the pivot also work. But see, when you have momentum, you can't trust it. They're not going to stand in the way of momentum. It'll only work during like balance phases, consolidation, stuff like that. And you can see that eventually, if you find them all, they're going to stack up on each other. And what you end up getting is consolidation, and then it leaves the area. So when I have this many all lined up like this, it basically means whoever can get out of here, if we can go higher than this and hold or lower than this and hold, then we're going to probably trend that direction. So if we can get down here and then we can come back up there and test it and then it rejects, there's probably a short on a higher time frame. Does that make sense? Because they're all lined up here, every one of getting underneath every one of these volume areas makes it harder and harder to get through them back the other way once you establish volume outside of them. But see, here we're inside, so it's just going to chop in here from one to the next. Right, yeah, just like I showed you, you're looking for two candles consecutively. And I explained this in the video and give some examples, but two consecutive candles, one has to be green, one has to be red. They have to have, the second one has to have smaller range, price range, and smaller volume than the first one. So decreasing volume, decreasing range, going in the opposite direction. It works best if they're small. If they're really big, it's not gonna work very well. You want relatively small candles. This is a perfect example. It should occur during consolidation or balance like this. And the important thing to remember is that you want to see them leave the area, because otherwise you're going to chop in there. Yeah, volume is super important, but primarily for when you're trending. If you're not a trend-based trader, what you really need to learn is, if anything, is volume profile. Volume profiling is a really helpful skill for reading the markets. And the book you want for that is Mind Over Markets by James Dalton. That's the book to learn volume profile with. He has another book that's pretty good too, but I like the original better, Mind Over Markets. The other one's called Trading with the Profile, I think. And that one's good too, but Mind Over Markets was like the original one from back in the 80s that like solidified the concept of how to use volume as a leading indicator. And that is a very, very useful book. Let's just say it that way. And what it's going to teach you, it's going to teach you how to build and explain or understand the profile, which looks like, let's look at the ES one. So it looks like this: market profile and volume profile. So here I got a chart settings, bar period, no, data limiting, and load. Sorry, doing some laundry. So if I load like 20 days here, what it's going to show us is where price spent time and where price produced volume. So this is ES, right? The colored one I heard people talk about trading with volume. I never could grasp volume, momentum, and how to trade. Yeah. So, are you trading futures, Hefe? Primarily, or are you trading like options and ETFs and stocks and stuff and cryptos? Because with futures, I honestly don't recommend a momentum strategy, which is where most people refer to volume. I recommend profile trading. Yeah, right. So I totally agree. Yeah. So if you're scalping futures, learning about momentum trading, following volume, confirmation with volume, that stuff, it's actually going to throw you off. MNQ, perfect. Yeah. So if you're trading NQ or MNQ or yes, nice. Yeah, perfect. Then the way you're going to use volume is different than what most people talk about with volume. Most people, when they're talking about volume, what they're looking at is momentum trading. So, which still works with futures. It's just not as it's harder. So like, if I pull up, yeah, it's super confusing because it's like two kind of different things. Here, let me pull up like let's see, Bed Bath and Beyond, something like runs, right? Bed, oh, yeah. So if you're trading BBBY, right, or something like ridiculous like that, like where like it runs in ways that like aren't natural. If you're trading this and you want to know whether or not you can trust, here, let's say you're trading this as a swing trader and you want to know whether or not this is a trustworthy move. Yeah, right. No, you mean on ES, you mean? 20 points on ES? I assume? Because, I mean, 20 points on Q is basically my bread and butter. But if you mean ES, then I totally agree with you. And I honestly think if, especially a newer futures trader, if you try to get the 20 ES points, oh, maybe you are talking ES or NQ. NQ are 20 points MES. Yeah, okay, 20 points MES. So if you're focusing on 20-point MES moves, you're going to have a lot of disappointment and frustration in your trading. Because in futures, that's just not something that is easy to learn how to determine if something's going to go 20 points versus 5 points. And you really don't need to know that to make money consistently at all. You can actually stumble on the 20-point moves, but get like bread and butter 2 to 5 point moves regularly with high win rates with this system, right? Right, exactly. That's what I'm saying. But a lot of new traders, like, they think that the day is only good if they caught the 20-point move. Like, that they must not be a very good trader if they can't always be on the same side as the 20-point move. And that's just not the way it works. You know, it would be like me saying that, you know, I don't have a good enough system because, you know, on NQ, when it like V-bottomed, that I didn't know to hold it, right? Like, that's just not true. You can make plenty of money in 20-point ranges. Like, my coach, he will occasionally stumble on 100, 150-point moves. We all do sometimes. But that's not how, he doesn't need that for a good day. His good day is just consistently take layups over and over and over again, and then sometimes stumble into really big trades. So with Volume Profile, what we do is we're actually using Volume Profile to determine our trade locations. So we're looking at it quite a bit differently than the momentum penny stock trader who trades like BBBY. And what I was going to say is that if you're momentum trading, what you're looking at here is, you could say like, okay, back in July, BBBY had for the first time some big volume on an up move, which signals some absorption. And so when they push price higher and it has more volume increasing, the chances that that move is going to be confirmed and go higher and start to attack some of the liquidity up here is increased. So you do end up getting a move up higher. What it doesn't tell you is whether or not you should be getting long, like in here or here or here. It doesn't tell you that. It just says shorts might be screwed for a little bit. That's all it means. Is like volume is confirming that price is trying to mean revert. So whoever was short here, if they are still short, they're probably getting burned, right? And they're gonna it's probably gonna go back to get these stops, maybe even these stops at like not $20, and there they go, taking the stops. $29. Did it make it there? Yep. So it just took the stops that were sitting up here and up here. See, everybody who shorted this candle put their stop above it. And so price came up, took their stops, and fell. Like that's just the way market works. It's not because it knows where your stop is personally. It's because everyone freaking trades the same way. Everybody just puts their stop above the pivots. So that's where the market goes. Oh yeah, it is. It for sure is. But so what we use the profile for is this is the market profile here, and then this is the volume profile in gray. So we get a little block every 30 minutes of the day, and we can see where the market went. If you look really close, you'll actually see little letters is what they actually are. Yeah, dude. I'm sure gold and silver was those can be wicked squeezes. So every one of these little things are actually letters, and if you look close, each letter is 30 minutes. We'd have to get really close for this to work. But that's just how this. So like, if this is E, like that's what it did during E period, which is the 30-minute period. And so what you end up with is a way to look at things as a distribution. If you know anything about statistics, statistics looks for different types of distributions, such as a regular distribution where the mean is in the middle, and then anything on the outside are what are they called? Extremes, right? And so what you can do once you've made a distribution like this, which is all volume profile is just a distribution of price and volume over time. Time becomes the constant, right? I'm not going to teach you everything. I don't have time to teach you exactly how this works, but if you do a Google search, a YouTube search for Dalton and volume profile, he's got a ton of free YouTube stuff to talk about it. He's got a great book, like I said. But the idea is we can look at volume, which is the gray one, or 30-minute periods, and like both of them work pretty much the same way. And we can look for locations where the auction is incomplete and where it is well auctioned. So an area that's well auctioned has a lot of volume and a lot of time in it. So this is a well auctioned area. And when you have a well auctioned area, you generally see price moving back and forth through it very easily. But if you can get out of the area, it'll end up being support and resistance. So while you're in it, it's very choppy, and you can move from one side to the other very easily. But once you get out of it, it can become support resistance, right? The opposite of that is a non-auctioned or a poorly auctioned area, which would be this low volume node here. Those tend to be support resistance on the very first test. See that? But yeah, that's what you'll learn about how that's how we use volume to trade futures. It's not the same way as like stock traders use it. I'm using it to locate location. So now if I did that, I could say, and we do this every morning. Simon, my coach, runs the room, and 30 minutes before they open, he like basically does this for everybody. Like he does the homework. Yeah. Like I mean we pay him to, right? It's not for free. Like we pay for the room, you know what I mean? It's $95 a month to be in there. And so he does at night he does all of the profiling, figures out where all the locations are and shares them. And like I'll show you. Like did you say NQ or ES? Which one do you usually trade, or which one did you trade today? I just want to show you how this works because, like I said, it's fun. But yeah, what did you trade today, or both? I don't know which one's better today. I traded NQ. I usually do, but I haven't given ES a close look. But if you traded ES, I can show you what we got this morning. Like now, I'm not going to share it, before the before the day. But if you want to see what we did, here. So the morning, ES. Okay. So in the morning, NQ, ES. All right. So at like 5 in the morning, we got this. And so this is the ES chart with all of his levels based on the volume profile, right? And so we all get this. So and there's like a color code to it that you learn. For instance, gray is single prints, which generally can be moved through easily. And then yellow zone and white zones are the best places for trades, which are down here at 37.20 would be your primary location for a trade. And then these are the purple is an anomaly where we expect at least some reaction there, but not a strong reaction, but you could get a scalp off of it. Red is a weaker location, but still potential location. So that was 37, 35, 50, which I think was pretty much where we bounced, right? What was it? 37, 35. Yeah. So that's pretty good. Like within a couple points. And then the blue is the point of control from the previous day. And so this is the choppiest area, right? So now if we take this and we just, let me show you this. So now let's go here, right? And let's take a look at how these two lined up. So this is the beginning of the day, right? So here, let me erase the lines. And we're gonna just quick put these on here. I'll just show you how this works. So I didn't trade ES, but if I did, what I'd want to know is I'd not be wanting to trade between 91 and 96.50. So I would mark off 91. I'm not gonna do this I'm gonna do it fast just so that it's not gonna be perfect. So this is gonna be a no trade zone, okay? Inside the point of control from yesterday. My let's see, primary. Yep, I think I can. Let's do that. So let's see. Okay. Whoops. So 38. Wait. Come down here. We were lower than that. Can't see. Okay, so 91 to 96.50 is our first one. Here, I don't need these. Remove drawings and remove indicator. Okay, so let's just do a clean chart. Okay, so 91 to 96.50. Dude, Sierra chart's hard to learn. Took a long time. That's why it's nice just to be able to watch Simon's chart at first, You don't need to learn Sierra chart to be able to be in the room. You can just watch his. Like he streams his thing live, and it's not on YouTube. It's on a better quality, like a true live stream. YouTube these days isn't even a real live stream. Like it's delayed. It's irritating. 37.91, 25 to 96. So this is our no trade zone, where we really don't want to be entering trades there because it's yesterday's point of control. Okay, and then we have single prints from 66.50 all the way down to, think that says 49.75. So 66.50. And Dalton in the book explains single prints. Otherwise, you can YouTube it and learn about it. But basically, the point is that single prints are easy to travel through. You can trade through them very easily. And if you can hop onto a trade into the single prints and ride through the single prints, it's usually a really good trade. But it's a hard place to get trades. Then we have, let's see, 40.50 to 35.50. 40 to 35.50. So that's red. This is the secondary entry, and then 20.50 to 17.50 would be best case scenario. Was it 23? 20 to 17, sorry. 20 to 17. So that's where we really want. But here, and this is single prints. I want to make this white or gray. All right, so that's what we saw going into the day, right? That's what we, oh, and isn't there one more? There's an anomaly. The anomaly is right here. 37.81.75. So that's a line. Also explained by Dalton. 81. Right? Did I say 81? 81.75. Okay. All right. And that's an anomaly, which is a purple. So the anomaly is generally will have a response on the first hit of it, right? But not always. Once you've overcome it, it doesn't always work on the other side. So if we now scoot into like a 3-minute chart, which is going to be like the closest thing to Renko, right? And like I said, we got this at 5 in the morning. So back up. Okay, so if you were up early, what you'd see is they're trying to get into the single prints and they fail, right? Probably an algo signal there. So that's 4:30 Eastern, 3:30 Central. It helps to have 2 screens. So right there, purple bar, star, underneath the what's it called, the radar, the channel, and gives you a nice couple points, right? We try to get at least, because we have a 5-point risk, so we want at least 5 points to the upside, and this one paid 7, right? So that's the first scalp. Then didn't reach this, so you'd need some other, you could still trade in here, you just don't have a high odds location. So we get into the signal prints, right? So the first potential trade would be a short here at 5.51, realistically, if you thought it was getting bearish. 5.51, so 4.51. No short. Oh, well, this. It's this. That's a short into the same area, right? If you wanted to be that. Is that right? Yeah, 5.51, so 4.51. So that gets you down here. Then you get out of it at 6 o'clock. So that's 5 o'clock. With the star. And that's a trap back in, which is a really, really high odds trade where you trade underneath one of these and you come right back into it and print an algo signal. That one gives you a lot of points, right? And then you have another one here at 6.18, so 5.18. Oh, is that just right here? It's just this. The other, like, you're already in that trade though, I think. Most likely. 6. So 5.25. Yeah, right here. Wait. That can't be right. So then what about this one? 6 and 6.20. So 5 is this. 520. Yeah, I guess this just took that long. You might have had to try it twice, but it doesn't look like it stopped out the first time. See, that didn't get underneath that low. So that's that, and that doesn't get to the anomaly, doesn't get to the anomaly. I mean, more opportunities for potential longs here at like 7 central. That one really didn't set up. It's just a star. There's no purple bar. I don't think that one went anywhere. I don't see a setup there, but it's a location where I could have set up. Okay, gets underneath and back inside the single prints. If you wanted to trade into the open, which I wouldn't recommend, you could technically take pink bar star, but it's at the wrong side of the channel. But you would have gotten 70, let's see, 67, 5 points. I mean, it's something. So 5 points on the short there, and then it looks like it got out of the thing at 830. So that's the open. And it's bouncing out of the single prints. Wait, 7, is that, did I say 830? So it's 730 this time. 730. No long there. Just didn't. Oh, it might have been this. Might have gotten that wrong, right? So if you were, is that right? It does not look right. Yeah, it must be. It's the right day, right? Okay, so now we get into the single prints, right? And so these are short opportunities here at like 8:30 Eastern, so 7:30. Huh, I must have had something wrong here. I don't think that's the long. I don't think it really set up long here. It just didn't set up. But now you get the, once you get under this, because the level is 6650. So 6650 is here. So basically it's like if you get reactions off this with an algo signal, this one's the clearest one. Or the purple, this one's better. But this is a trap back in and this is purple bar star. You learn the signals eventually. Those are your primary longs. And then once you get under it and they reject it right here, now you're looking for shorts because you're in the single prints. No short there, just didn't signal. That one I guess you could take, but it's not inside. That's a good one. See that? That's beautiful. There's another right there. And again, the key is to know not to look long here, right? And so it helps to have a room full of traders who are doing the same exact thing. It helps a lot. And so that's how we dealt with single prints. Here's the low. So it got up to the half gap. You can draw the midpoint of these single prints and find the halfway point. And oftentimes that halfway point will be significant because algos run things. So they use easy math. So like 57.75 was the midpoint, which Bill here, another member, Bill, I recall, actually called it out. ES half gap around 37.30. And you can see we're chatting in here, right? So 37.30 would be the half gap. That would be down here. And then the halfway point in the single prints, I said was 37.57. So this would be the other place to look for reactions if we can hold above it. So let's see. So you wouldn't take this. Purple bar star is really, this would not be where you want to take it because your resistance is right here. Hopefully that makes sense. You don't really want to be getting long here if the highest you think you're going to get is here, especially if you can't seem to get outside of the bottom half of this channel. The longs become more dangerous. You got a little something, but not one-to-one. Okay, that looks promising, but does not make it past the channel. And so we're in the single prints here, and it makes sense just to wait because they're easy to travel through. So you don't really know which direction you're going. I mean, you could just see this as balance, but there aren't really any great trade setups here. I don't see. So this is just kind of a wait and see. But we did not make it to 37.30. Is that right? I thought we did. Hold on. I thought we made it there. Am I just not there yet? What happened here? Oh no, we just didn't make it there yet. Right? What the fuck? Did we? What am I doing wrong? 10.5. ES. Let's see. What time was that? 9 o'clock. And it went all the way down to 37.35. Oh, did it just not quite meet it? It just didn't quite get there. I see. So we didn't quite make it. I guess we made it into his... No. Yeah, we didn't make it into this one. But we had... Simon had given us this range, which was good. Why did I say 37.30? Oh, that was the half gap. Okay, sorry, the half gap. So what Bill was saying, I got confused. What Bill was saying is the gap overnight between the close here and the open here was ES half gap around 37.30. Oh, it must have been the previous gap, this gap. So he's measuring the gap. That's why I was confused. From here to here. And identify that this area might get a response because it's the halfway point of the gap in price before Tuesday. Okay. And price just did not make it there, but we did have a level in the room at 36 to 40 or so. So this one didn't make it. 36 to 40 is that was our secondary location. And I mean, it tapped it, but I would want to see a star here or a green bar. This one would have worked too, but it did not signal. In NQ it did, but ES it looks like in both cases it didn't quite signal you to get long there. We didn't get a trap either. It would have had to go under this, and it didn't. The only other way to do this is to find the low and measure to the low. Find where all the volume is, which is here. This is like the advanced way to do it. And then wait for price to establish volume above this, which happens here. And now you'd take the signs that interact like that. That one would have stopped. This one would have worked. So it would have taken you 2 tries, but you would have gotten long at like 45. Yeah, but that was in NQ. In NQ. NQ was much easier. In NQ, where the heck is it? 24 tick. In NQ on his, it was much easier. We had purple bar followed by star right at the location. And like I said, we have NQ also. So in NQ, we had 70, let's see, 1350, 68.75 was the bottom of the single prints. So basically we knew anything in here to, let's say, it was like 400 or so. So anything in here is where it could bounce. All right, let me take off all the rest of these. So we knew once we got into the single prints, we knew that the likelihood is that we're going to fill the single prints. That's the expectation. And then to look for longs off the bottom. And so as it went down, that's not a long, there's no star, purple bar, star. That pattern trades over and over and over again as long as you're at location or it's bullish. That lifts. Now, it also gave you a second opportunity to get long here. This is where I got long. And to get that long, what you had to do, I didn't catch this one. I just wasn't that aggressive, but he is. What you have to do is you have to get these measured. Is that it? Is that the one we took? Oh, wait, it's to the low. I messed that up. Hold on. It's to the low, which is this wave. There we go. So this wave to the low. Single prints is on, it means on the volume profile that you had only one, that price fell through there without getting any response. So this is an example of single prints right here. And this right here. So periods where you followed through an area and you only spent 30 minutes getting through it. On here, let me show you what it looks like on the candles, because that's what you're used to. On the candles, what it looks like is this. See how we never came back to test that? So the single prints align with this. See that? That's the pullback. And this is the breakout. So these are the single prints. Because it literally just printed straight up in a single, it never came back. It just went straight up through it. So these are single prints here. And there's rules for single prints that you need to learn. But the basics are that they tend to act as resistant or support and resistance on the outside. But once you get inside them, they tend to fill, at least to the halfway point. And so in this case, they filled and they went right through it, but they didn't set up to get long again until it bounced off the midpoint, and then they tried to get under it again, and then it went. So in ES, this was the high odds entry here. This one was the aggressive entry here. But when we got back into the single prints and it pulled back and it tried to get under it and it couldn't, and that's at 12. So at 12, so that's 11 this time. So the high, like I said, this was a hard entry to get. The easier entry is this one. Purple bar followed by star, and it's off. That's the one most everybody wants, right? Is that one. Like this one is, you can get them, but you need to do a little more work. And like Simon Sheridan, we got him. But even if you miss this, once we got out of here, like this one was pretty clear and this one was pretty clear because we were in the single prints. We got under the single prints. We came back into them. I think it's actually here. I forget. What was the actual level? I think it just set up a second time. The level is 48.50. Nope, it is this one. It is this one. 48.50. It is this one. So the single prints were down here. And so once price got into them, it's very likely you're going to travel through it. But when they get out of it, then it becomes support resistance on the other end. And so that becomes a very obvious place for people to look for longs. And like I said, the algo identified it with both the green bar as well as purple bar and followed by star immediately. And so that's where you get the 50 points. Plus, if you had the guts to hold through all, this just took a long time. It never really came back against you. You just needed to be willing to like hold for the rest of the day. Because it never really came back. See, but after this opportunity, you never got a chance to get long at the bottom of the channel. It was bullish this whole time, and so you had to buy at the top of the channel, which is something that my coach does not condone because it doesn't work very often. This one did not get a purple bar here, so this one didn't signal. And then this was a good entry. And then it just didn't signal all the way through here. until the close, which got us short. That was the short signal. So I mean, oftentimes ES is a lot more straightforward, but NQ will give you more rotations. So with NQ, I'll end up getting 10 trades of like 20 points or so, and ES, I might get 3 trades, and 2 of them went 5 points each, and 1 of them went 30, you know, if I'm lucky. Like, I mean, here though, like this was a huge extension. This was I'd probably take this as a scalp because I'm taking it so high. I wouldn't hold through this personally. This one's okay, but there's no purple bar here, so it's very aggressive. This one's super aggressive, but it worked. And then this one is like A+, and it traded. You basically got paid as many points as you could hold. Whereas the ones down here, they were good, but they were hard to catch because you had to trust that those single prints were going to hold, and sometimes they don't. So it's just like you just kind of had to decide whether or not you wanted to take a shot at it. You knew if you wanted to get long, you knew where to get long, if that makes sense. You knew to get long down here when the stars to the upside showed up, right at the single prints, or right at that location, that what's it called, the red zone here. You knew to look for longs, and so if you got the signal, you can take it. But usually how this works is they're high odds to get 5 points. You know, this one failed first and then trapped back in and could have given you your 5 to 10 points. This one you had to maybe take twice as well. So sometimes the more aggressive ones, they don't always work the first try, right? But the high odds ones, like this and this, they work a ton. So if you're patient, you can just wait for the high odds trades. And that's hard to do because you're sitting there watching the market, waiting, and like you see that signal, you just want to bang it, you know. But you have to accept, if you're going to take this trade and you put your stop right here, that if it stops you out and then it signals again, you need to get long again. And that took me a long time to accept that, like, even if you get a 80% win rate, like today I had a 80% win rate, I think. Is it 80? Oh, they took it away because it started a new day already. I think it was something like 80. But normally I'll have like a 60 to 70. So let's say I got a 60% win rate, like an okay day. That still means 40% of the time my trade stopped, right? And so it means that a lot of times on those days, I had to get in, get stopped out, and get back in. But it doesn't matter as long as you're only risking 5 points and you're making like 6+, right? Then it doesn't matter. I think the hard part for most people is they wait and they wait and they wait and they take the trade, and then it stops out and they're like, man, this didn't work, and then they don't take this because they're scared. So that's where it gets hard. It's just like, what, you know, you do, and it also shows you why you, as a new trader, why you don't want to take the aggressive trades, because it's really hard to come back and take the trade over and over and over again when your win rate's only 50 or 60%. It's so much easier when you can have a 70+% win rate, and you know that if you ran into a couple stops, it's not going to keep doing that most of the time. Most of the time, if you keep at it, you'll come out ahead because the back tests show 70% win rate. So it's like, well, I just ran into that 30%. Like, I just have to keep hitting it. As long as I'm doing it right, it should work, right? Like, once you actually believe that and you see it work, it's not that hard, right? But like, for example, like this is a buy, right? Purple bar star, and you get into the upstairs of this and you get out, right? This one would be in a very aggressive sell, but you do have a pink bar here. So an aggressive trader could take the short here, but they're already looking long now, you know? And so you have to decide, like, how much do you want to trade? Like, do you want to try to catch everyone? That's fine. Just realize that your win rate's not going to be 80%. And so sometimes you're going to get long. You're not going to take profit. It's going to stop you out. And you're going to have to get right back in again to get your 5 to 6 points, right? Like, this is normal.
these little like stop sweeps, like you just have to learn to be okay with that and to be ready. Like as soon as your stop gets hit, to like be like, okay, are they going to come right back in again? Like you just it's kind of like boxing. Like you have to take some shots to win a match. You're never going to get through a boxing match without getting hit in the face. Like it's going to happen, right? The difference between a pro boxer and someone who's just like learning how to box is the pro boxer like doesn't just go down and get frustrated because they got hit in the face. Like they know if they just keep doing what they're doing, that eventually they're going to probably win, because they're good. But when you don't have that confidence that you know what you're doing, you take the stop and you're like, oh my god, I must have done something wrong. And so when you see it set up again, you're like, I don't know if I want to take it. And then it pays, and it's like, fuck, what am I doing, right? That's where the mistakes come in, is where you start getting scared about the fact that like you got taken out by a tick. And it doesn't mean that the process doesn't work. It's just it's not 100%, right? And no one tries to say it is, because there's not a 100% system. It doesn't exist. Just like there's not a pro boxer who's never been hit in the face, or probably a pro boxer who's never hit the ground. Like most of them have probably even been knocked out. But the difference is that they come back and they know what they're doing. They eventually continue to do what they're supposed to do. But that takes confidence, and to get the confidence, you need practice. And that's why you can't just like pick this up and immediately trade off of it. You do have to learn, like, what is normal, like how many stops should I be taking, right? Versus like, how do I know when I'm actually doing something wrong and I should stop trading so I don't blow up my account? And for most people, that's, you shouldn't be taking more than 2 stops in a row. In other words, if you got stopped out here and you got in again and it immediately stopped you out again, you should probably not keep trading here. Because you're probably doing something wrong, because that doesn't happen very often. But if you take a stop and then it works, and then you take a stop and then it works, if you're giving away 5 points but you're making 7, even a 50% win rate, you're going to do okay. So hopefully that makes sense. It's like I do get more than a 50% win rate, but it's good to know that with a 1-to-1 risk-reward ratio, you technically could survive. Like, even if every single time you got in, you got stopped before it worked. And it's thankfully it's not that bad. It's a lot more. It's a lot if you're consistent with only taking the high odds setups, and you don't take every single star or every single green bar, right? You're gonna get a really high win rate. But if you can see that, like, if you just start like nailing all of these algo signals, eventually you're gonna get clipped every once in a while, right? And that's just normal. So it's just that acceptance is what's so hard for people. That like that the idea that might happen is very difficult for people to accept until they trade a couple days and they realize that if they just keep doing it, it actually works out. So hopefully that makes sense. But yeah, this is it's been cool being able to explain something to somebody who actually has some good questions. That's nice. I do only have a couple minutes though. Do you have any more questions, Hefe? I'll be back tomorrow. But if you got any burning questions now, I'm happy to answer them. I probably got about 10 minutes, and then I got a jet. So let me know. Or if anybody else is in here and they want to ask a question quick, let me know. As far as what's going to happen next on ES, we had this anomaly up here that we got over. This was the point of control. So we're in a no trade zone currently. This is not a good place to take trades. It's going to get really choppy in here. What we wanted to see if we were bullish is we wanted to see them reject off of the POC and not come back to it. So now that we're back in it, it's not bearish, but it's also not bullish unless we can break out of here and stay up here. It probably is balanced, but it's very possible that this low gets taken out and they start chopping in a wider range here, and then whoever takes this zone will be the one who gets the next extension. So it's like, if you develop volume down here, it's going to be bearish. If you develop volume up here, it's going to be bullish. Well, so far we've developed volume at the top, but now unfortunately we've returned to the midpoint, this POC. And so if you get stuck in the POC, yeah, you basically have to start that whole process over again. Cool, cool. Yeah, we'll see what happens. I don't usually trade the beginning of Globex unless like the setup is really strong, and I don't see a great, especially if they're in the POC. There's no setup here. But what I'd like to see, since the single prints got retraced and then we rejected out of it, what I'd like to see is actually higher. That looks easier to me. What's harder, but might be fun, is to come back in and get down to here, right? It's not going to go in a straight line, though. That's the problem. Is that now that we've done this and broken out of it, this area is we can basically delete that. And you can redraw the single prints where they actually are from today. Right there. Yeah, cool. Are you gonna be in the room? Hefe, are you gonna do a visit to the room? Simon will let you come in the room for a couple days if you're interested. Here, let me put, in case you haven't contacted him, it's trade and perform at gmail.com. So if you contact Simon, if you want a free visit to the room, let him know that you follow me on Twitter, and he'll give you like more than like whatever you need to like get a feel for it, to see if it's something you want to, like, if you want to actually be in the room. He'll let you be in the room for free for at least a couple days. So yeah, just mention me, and they're like, for sure he will. And then you'll see me in there. I trade on Tuesday, Wednesdays, and Thursdays. I've got a regular job that I do Fridays through Mondays. I work as a occupational therapist with kids with special needs in a clinic in town, so I'm not able to be in the room on Fridays and Mondays. But the other 3 days, I'm in the room pretty much all day. If Simon goes to lunch, I will occasionally run the YouTube channel and just kind of share what I'm doing, since he's not there. But if he's in the room, I can't really be streaming, because otherwise it could pick up like his voice and his calls and stuff, and that's not fair to him or anybody in the room who's paying for the room, you know. So if the room is like active and people are like calling trades and stuff like that, like, I'm not gonna stream. But like, if it's like today, after we hit this, like, he was just done for the day. He was like, that's good enough for me. I'm done, and that's cool. Like, he does that. He left the room open so people could watch his screen, but he wasn't giving any more commentary. He did come back in the afternoon, but I noticed, but I just left the room so that I wouldn't pick up on anything he said. But he was, when he left after this, that's why I picked up the stream. But just so you know, like, yeah, he generally, if he is in the room, I'm not going to be streaming, because I'll be learning, basically. So, but yeah, if anybody, including Hefe, wants a visit to the room, just contact Simon, trade the letter N, perform at gmail.com, and let him know you follow Redben on Twitter and learned about the algo and want to see it in action. And yeah, he can answer questions better than I can about the actual algo itself, and like what's all involved with like room membership and all that. He's the one to talk to about that, but he will at least give you a week. And honestly, if you ask him for a couple more days, if you're still really undecided and there's like something you actually want to see, like you didn't get to see a trend day, or you didn't get to see whatever, like he'll, if you remind him you follow me, like he's not going to say no. He's actually really understanding and cool person. I'm not suggesting people take advantage of that. I'm like take advantage of him, but I'm just saying, like, if you really do feel undecided and you're like, God, if only I would have seen this, like, tell him that, because it's not a big room. We probably only have like 25 people in there, but they're all dedicated traders who at different levels of experience, and who are all following pretty much the same process. So, if what you're interested in is finding a process that works to trade futures, it's a good fit. But a lot of people are like not willing to do the work to learn the process, and then it's not for them, and that's why he does the visit, so that you can sort of see what's involved and what kind of like time investment it is to learn how to run it and to run the system. Because he's not just going to hand you all the trades. He's going to teach you how to find them. He does call out trades, but that's not how any of us make most of our money. It's not because Simon told us to buy. It's it's because we understand that this is the pattern we're looking for, and we can do it all by ourselves. And that is his goal for sure. And he's done a great job with that and been doing it for years. So hopefully this is